of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information play.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all those stock-related queries. So if you haven't already, do start sending in your queries on the numbers that are flashing on the top of your screen. You can also call us on the landline number as well as speak to us as well as our guest on those stock-related queries as well. But before we do that, as we do, let's take a quick check of how the markets are doing, because today we've seen that in the morning we were up and now again have actually just receded slightly a bit from the highs, but continuing to be above that positive zone of 23,300 on the Nifty 50. So 100 points up. We'll hopefully continue this momentum yet again in the closing 90 minutes of today's trading session as well, because you've seen pressure on the index over the last couple of days. So hopefully a better end today. When you look at the heat map also, there were some individual movers like Indigo that were doing well in trade today in terms of the morning session. But HUL has continued to be in one of the top gainers. Kotak Mahindra Bank also doing well. So there are a lot of stocks. So is Nestle actually at the 2% mark. So they are changing hands between the top gainer for the Nifty 50. But all these four counters continue to do well. You're also seeing some pressure on Hindalco as well as Infosys today. Also on Oil India are some of the other names that are doing a slightly weaker show today as well. But very, very balanced screen at this point of time for the Nifty 50, because you're seeing a 23 to 28 stocks that continue to do well in the green, 22 stocks for the Nifty 50 right now in the red, and we continue to monitor what is happening with these moves as well. But also in terms of what we have seen, the sectoral heat map. Now that is also showing you some interesting signs, because yesterday was a day of the PSU banking index as well as the private banks. So while the private banks have continued to do well, PSU is largely a little off from yesterday. But the Nifty FMCG is a clear winner today, while media is consolidating after there has been some stoppage essentially of moves on Z Entertainment. But when you look at the advanced decline ratio, that is the other interesting one, because we have seen that in the morning it was a crisscross patterns, unfortunately for the modern markets, and today that position has been reversed. They have become a market of benchmarks. So you are seeing that the Nifty as well as the Bank Nifty continue to dominate the news flow, while the broader markets are under pressure. That's visible in the mid-cap 150 and the small-cap 250 as well. Mid-cap 150 was flat at one point of time, now down 0.5%. Similar for the small-cap 250 as well. But for the individual movers though, in terms of the BSE 500, you have HFCL as well as what we've seen, for the other counters as well, like Sterlite. Both are down by 5% and continue to, have the wrath essentially of that strong up move, money being taken off the table. Oil India has slipped to 8.5% now. Welspun Corp also under pressure. And so his Manappuram Finance as well as Muthoot Finance, was also down in trade, has recovered a little bit as well. Ease My Trip, Chambal Fertilizers, Crystal, Apar Industries are some of the other gainers in today's trading session. But let's go and start taking your stock-related queries now, and to answer them, let's welcome our guest, Narendra Solanki, Head Fundamental Research Analyst at Anand Rathi Shares and Stock Brokers. Sachin Janardhan, who's the independent market expert on the technical side of things. Gentlemen, both of you, thanks so much for joining in. The first question, Sachin, coming your way on Dynamatic Technologies. Our viewer has bought shares at 10,855. Stock's done well in the last 1 year, but is that move expected to continue, Sachin?
The trend of the stock is up only. Only the structure has right now not good, and even the momentum is weak. There is a support levels around 9,300 levels. If that support level is holded, there is no problem. But if it is closing below 9,300, then we can see a deeper correction like 8,000 and 7,000 as well.
And what is the time frame for this move, Sachin, which could be on the downtick? Is this more of a near to long-term call?
So yes, the medium term and the long term outlook will be changed as it will close below the 200-day EMA, and the overall trend will be changed, and the structure is already right now not good.
Got it. Well, the next question is from Sriram, who's writing into us from Chennai, and his question being on Shakti Pumps. He's bought shares at 560 rupees per share, asking if he can average down or continue to hold this particular counter now. Let me welcome in, our fundamental guest also at this point of time. Narendra, just in terms of this particular stock, you've seen both Shakti Pumps as well as Oswal Pumps last year. I think because of the delayed PM Kusum scheme, not get too many orders, and hence the working capital was also under pressure. Any coverage on either of those counters that you have?
Yeah, definitely. Since Shakti Pumps is one of the leading providers of solar and electric submersible pumps, definitely they are the leading executors of the PM Kusum Yojana. Plus, the next round of PM Kusum Yojana was got delayed, and that's why they have faced short-term problems. But I think medium to long term, when the ordering activity would pick up, I think the performance would come back. And if the person has a time horizon of holding the stock for about 1 year or so, then I think he can continue to hold the stock.
Got it. And the next question coming in is now on Mazagon Dock, and our viewer wants to know if it's a good time to accumulate this counter for the next 1 to 2 years. He does not hold the stock, but he's looking to enter, Narendra. Would this be a good level?
Yeah, generally we are very positive on the defense sector theme. But just one rider of caution is that defense sector is a very lumpy sector in terms of execution and order inflows as well. And the projects have a long gestation period. So ultimately, to generate a revenue from this point onwards in any defense stock, I think the time horizon should be at least 3 to 5 years, because that is the kind of timeline of execution all the defense projects have. So if the person is ready to invest and remain invested for that kind of a time horizon, then I think this place is very interesting, and the growth room, the headroom for growth is very huge for the sector going ahead.
And any direct view that you have on Mazgon as well, Narendra?
Yeah, we have a positive view on the stock as well.
And any targets that you're watching out for?
See, in the near term, we have. I think we can have a 15 to 20% upside right now.
Got it, Narendra. But let's go across and take our first caller for today. And this one's dialing in from Hyderabad. Murli has a stock query for us. Murli, very good afternoon to you. Welcome to the show. What's your query?
Yeah, very good afternoon. This is Murli from Hyderabad. I have remaining 10 shares of Sem India project at an average of 562.
Okay.
After booking some profits, I wanted to know if there is still upside. Should I hold it for another 6 months to 1 year?
Got it. Sachin, would you recommend that, or is it a good time to book profits on Sem India?
One disclaimer I would like to give: this call is open in our investors are also holding. So of course he can hold. There is no problem. From a long-term perspective, medium to long-term, the stop loss will be 900 levels, and we can see around 1300 to 1500 levels in the near term.
Got it. Well, viewers, also standard disclaimer: the channel that you're watching is part of the Adani Group, and so is the stock that we just discussed as well. So just to let you know as well. But the next question coming in now. It's from Gautam from USA. Now, he's a regular viewer. He's holding 2,000 shares of Eternal, bought at 289. So currently sitting on a slight loss. He's asking what's a good view for the next 12 to 18 months on this counter. How are you viewing this, Narendra? Because we are seeing that, of course, in the quick commerce space with Blinkit, they have had a larger coverage compared to its peers. But the stock just doesn't seem to move and has been consolidating at this zone for a while now. How are you viewing Eternal right now?
We are very positive on the stock. We also have a buy rating on the stock, and the major part of performance for next 2 to 3 quarters we are eyeing is from Blinkit, where we would continue to see the kind of a strong momentum in the growth, and the market share also gradually rising, and the profit from profitability point of view also it would be the momentum would be sustaining. So we are positive on the stock, and right now we have a target of 400 rupees
on Eternal. So that's very interesting, and continuing to be bullish at this point of time. The Andati on Eternal has been consolidating though in this zone. But the next question coming in now is from Sagar Pathak from Mumbai, and he wants to know view on Powerika. Has seen some correction over the last few days, but Sachin, is it a good time to add this counter?
So overall, what we have seen right now from the all-time high levels, there is a huge correction. The structure has changed of the stock. Basically, the higher high, higher low pattern has been like lower high and lower low. So one support levels I would like to give, which is around 412 levels. If that is hold, then we can see a turnaround in the stock, and it can again achieve its all-time high level. But however, if 412 levels is not holded, then we can see 360 and lower levels.
Got it, Sachin. But the next question, we did discuss defense with Narendra just a while ago on the question of Mazgon Dock, and K. Guru from Chennai wants a specific view, and he wants to buy into Zentech or BEL at the current level for the next 2 years. Narendra, you spoke about the long gestation period that investors will have to hold these counters for. But for specifically for BEL and Zentech, do they come in favor at this point of time as a buy call?
Yeah, definitely. Bharat Electronics, we do have a buy rating. Zentech, we do not have any coverage or recommendation. But yeah, Bharat Electronics, we are very positive on. And the person can definitely get exposure into the Bharat Electronics. We have a target of around 500 rupees. Apart from BEL, we are also very positive on Astra Micro if he's looking for some small cap, mid cap kind of exposure. And the kind of radar and aerospace orders we are expecting from Astra Micro in the near term are very decent. And I think this stock is also has a very good long-term future.
Got that view. And for Astra Micro also today, the interesting news is that they are demerging their space meteorology as well as hydrology business into a new entity called Astra Space Technologies. So how that shapes up will be something to watch, but it's really heartening to see what's happened with these smaller defense companies over the last few years getting scale and now looking at diversification, demerging to unlock value. So keep this stock on your radar. Next one coming in now, and this one's on Chambal Fertilizers. Nagashri has bought shares at 573, asking if she should continue to hold or what should she do with this counter. Sachin, we are seeing a 5% uptick today on this counter. Any view for her?
Overall, the trend for the stock is down, but right now it has actually moved out from that zone, and today it has recaptured its 200-day moving average. With this kind of a candle and with good volumes, she can definitely hold, but definitely with a strict stop loss. The stop loss will be around 445 levels. If it is closing again below 445 level, again the structure and the trend will change from up to down.
Correct. Well, the other counter, and which has just fallen off a cliff today, it's Oil India. Now, a viewer, is holding shares, 55 of them at 481. Stocks down 9.5% today, and you can see that consistent move. This is Jatin from Chandigarh asking what he should do with his 55 shares. Narendra, any coverage that you have on Oil India? And because you've seen that over the last day, just in the last 12 to 18 hours, you've seen the geopolitical crisis again taking shape, multiple attacks on US air base as well, and probably the volatility in oil is impacting the stock. Any view on Oil India?
Yeah, right now we do not have any coverage or recommendation on this stock. However, considering the geopolitical crisis, I think the space would continue to show this kind of volatility based on different outcomes in terms of resolution and escalation of the war, which is at this moment is very unpredictable and very difficult to predict. So I think there are many other opportunities available in the market which are expected to give better returns in near term.
Correct. Well, the other question now coming in is from Avdesh Ojha from Delhi, and he wants to know in the power equipment space, which are some of the key aspects to watch out for. So Hitachi Energy, Siemens Energy, GE Vernova, as well as some of the other stocks like CG Power, he feels are expensive, at least in the near term. But Narendra, any coverage on either of those or the space that you like within the power space? What's your preference?
Yeah, definitely. Transmission and distribution segment in power space is one of our favorite spaces where we are actively recommending to our clients. The stocks like CG Power, TD Power Systems are one of our top picks. Even we have a recommendation on GE Vernova, but right now it is already trading above our target price, so it is under revision. But yeah, definitely this space is looking very interesting, and the kind of investments which we are going to see, and the kind of demand, the demand for the power, and the need for solar and wind and renewable energies to provide a transmission distribution network so that the power delivery can happen to the consumer clusters. So all these factors are very positive for the T&D segment, and the ordering activity should continue to remain very, very strong for next 2 to 3 years. So definitely we are very positive on this segment.
Got it. Well, our viewers, Narendra as well as Sachin, it's now time for the rapid fire round in this edition of Ask Profit. You both know the drill. The first question coming in now on Anthem Biosciences. Our viewer Rajan Iyer wants to know if it's a good time to purchase. He purchased the stock at 776. Narendra, any coverage that you have on this one, and what's your view?
No, we do not have any recommendation on this.
Sachin, on the charts, any view?
We are holding this stock and continue to hold. There is no problem.
Got it. Kane's Tech is the other one. Our viewer wants to know if at 3062 is what he's purchased at. Should he continue to hold, Narendra, for the next 2 years?
See, as far as coverage is concerned, we do not have a recommendation, but overall electronic manufacturing space is a very interesting space and growing space. So from that perspective, the sector is going to perform. However, looking at the valuations and execution, one can take a call regarding the individual stocks.
Also on Motherson Wiring, our viewer is holding shares at 43 rupees, currently sitting on a loss. Any view that you have, Narendra, for the long term?
I think it's better to switch to another different auto ancillary companies like Minda Corporation and Gabriel India. because the company has a high exposure to export markets, and right now because of the global volatility, the stock is not able to perform. So it's better to switch to different opportunities.
Got it. Well, the next question coming in on Havels, and this is from Pachka from Thiruvananthapuram, holding shares at 1150. Sachin asking what's the near-term view. He's just bought yesterday, is what he's saying.
So the trend of the stock is down. Basically, you should not hold this.
Got it. The next question coming in now, it's on HCL Tech. Our viewers currently sitting on a loss of almost 5,000 rupees. Any view, Narendra? Should he continue to hold?
Yeah, can continue to hold.
Next one's on Bajaj Housing Finance. It's our viewers, Shreyas has bought it at 95. Stocks trading below that level. Is it a good time to average down, Sachin?
No, the trend is down. We will not suggest to average basically.
On Central Bank of India as well, our viewers bought shares at 40. What's the view here, Sachin, on the stock?
Even the trend is down, the view is basically to exit.
Got it. The next one's from E. Venkatraman. He's holding shares of both NHPC as well as SJVN, but is in a loss of between 14 to 17%. Any coverage on either of them, Narendra?
No, we do not have any coverage on that.
On the charts, does anything look interesting right now, Sachin?
All stocks are in downtrend, basically to exit.
Got it. S. Sriram from Vishakhapatnam wants a view on the hotel space. Narendra, he's holding on to ITC Hotels, but at 206, and wants a 5-year view on the stock in the space.
In hotel space as a sector, we are very positive and constructive right now. And in near term, there are few challenges regarding the inflation rising, and so the near term performance can be disappointed. But yeah, long term, we are very positive on the sector.
Got it. Well, that was the last question of the rapid fire as well as this edition of Ask Profit. Narendra as well as Sachin, thanks so much for joining in and giving us your views. But viewers, that's all the time on this edition of Ask Profit. Thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be a chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes.
Welcome, you're watching India Market Close and we've managed to stay up. I mean, that's the headline and that's the best part of it, frankly. 0.37% up on the Nifty. The advanced decline ratio, although skewing towards the sellers as the day has progressed. Pull up the intraday chart of the Nifty. And Alex, you'll see that we've stayed pretty much range bound. Maybe come off a bit in the last 20 minutes or so.
Yeah, and it is some of those heavyweights that have come off that is probably resulting in this, because pull up the heat map for the Nifty 50 and you will see that Reliance Industries does not rank on the top. At one point in trade today, it was trading with gains of about 2%, but it is now given up all of that. It's trading just about flat with cuts of about 0.2 or 0.1%. Axis and the private sector banks once again ruling the roost and contributing most in the way of points.
Along with FMCG.
Yeah.
FMCG has been an interesting play today. Nestle, HUL, ITC, all of them coming to the fore. Max Health also looking interesting, but on the losing side, Hindalco continues to struggle. The metal pack entirely, even Tata Steel is out there. You're seeing Infosys taking a bit of a knock more than its other IT peers, and Coal India and ONGC not doing too well. ONGC because Brent prices have actually come off, and we'll pull up the Brent for you in just a second. But let's just get you the broader indices as well, if we can. And okay, there you have it. You have the Brent very quickly there. See, it's kind of come off. Yeah, it's under the 92 mark right now. So ONGC is cooling off a fair bit as well. Just pull up the the broader indices for a second, and that's where, Alex, we have lost steam, isn't it?
Yeah, absolutely. 0.6% lower for the mid-cap index. Pull up the small-cap index, similar. And so therefore, what you saw at the beginning with regard to the market breadth tilting very sharply in favor of the declines, that has taken place around the mid part of today's session, and it's widened. It currently is at the widest point. So if yesterday there was considerable strength in the broader markets, what you were saying in the morning today, it's tic-tac-toe.
Yeah.
It's one day forward and the next day back.
Yeah, we're still seeming on the positive, at least for the benchmarks, if that's anything to go by. Yeah. Let's pull up the sectoral indices for you, and then the gainers and losers, just to round off this quick update. FMCG is firing today, as much as FMCG fires. I mean, 1.5% up, but at the pace that these very large companies move and their stocks move, 1.36% up there. Private banks, like we told you, are the heroes, and so all of that Nifty concentration is showing very clearly. On the losing side, media, energy, metal stocks are the ones which are not doing too well. But Bank Nifty, private banks are okay, in that okay
What
space.
is interesting is to watch the PSU banking pack, right? After it's moved 3.7% yesterday, it's taking a bit of a breather today. It's the private banks that are coming to the fore. And it's that FCNR conversation.
Completely. I was just going to say that. So FCNR deposit rates have been increased. So here's what's happened. If you recall, the Reserve Bank of India wants to make, is helping out, and it's the government's policy to make deposits in government bonds more attractive for people sitting outside the country. So this new scheme was announced. A lot of private banks today have announced the uptick in their deposit rates, maybe ahead of the public sector banks, and that could be one of the reasons that you're seeing these banks come up. In fact, this is what's happening in the market today. It's a strong technical momentum for the Nifty. Nifty is sustained above the 23,400 mark, and this actually opens up a new range of 23,600 to 23,900. The Bank Nifty up move is likely to get capped. Benchmark indices have outperformed the small and medium companies today, and you're seeing buying in FMCG and banks, selling pressure in gold financing companies, metals and IT. The rupee, meanwhile, has shown strength. Crude levels are remaining below $92 a barrel. And this May data, which came in, is important. Marginal decline in May SIP data. What should you track? The US May CPI data will come in today, and that's very, very crucial. Ajit Mishra, SVP Research, Religare Broking, joining in today. We're also going to be speaking with Dharmesh Khan, Head Equity Research at Chola Securities. Dharmesh, are you excited by seeing this FCNR news with all of the banks talking about their rates, and is private banking looking like it's going to have another run?
Yeah, good afternoon, Tamanna. I mean, it's a welcome news, and at the same time, it allows banks to raise more deposits, which is a lower cost of fund. So, particularly, public sector banks, where this gap was very high, credit growth was 15-16%, whereas the deposit growth was 9 to 10%. They were struggling to mobilize deposit growth. So, through this route, I think that should take care of it. Though it's a long tenor fund, 3 to 5 years, but still, the cost of funds are likely to be marginally down after that. So all the banks have not announced the rates, and how it's likely to sit into the overall scheme of things has to be seen. But our sense is at least it would be NIM accretive. I mean, 10-15 basis point of an appreciation in NIM one can see, and higher deposit population. So definitely, yes, a good move on the profitability front. And having said that, let me just highlight FY26, the internals of the entire credit growth was very good. But if you look at the reported PAT numbers of banks in the Nifty 50 basket, it was hardly 3 to 5% kind of growth on a year basis. So that will be taken care of. One is through a stable and a better NIMs, and the second is a better net interest income growth. So I think both the triggers should play out in FY27 for banks.
Okay, very interesting. All right. Let me take that forward and ask Ajit Mishra what he thinks about the banking back, because private banks is where the strength is at today. And good afternoon to both of you, gentlemen. And the Bank Nifty has shown relative resilience, right, Ajit? So when you look at the indices, is that where your attention is?
Yeah, good afternoon, Alex. Good afternoon. So what we are definitely seeing, Alex, is breather, when it comes to the Nifty index after this phase of underperformance or correction. Banking is the major reason why we are seeing the downside momentum capped. Means on every uptick, anyways, we are seeing pressure emerging from one way or the other. But banking definitely looks promising. Despite this recent surge, we still feel that maybe around 56,000 mark, where all the major averages are aligned, could be the area where it might find the next resistance. But having said that, for Nifty, the first area of hurdle is still intact at 23,500, 550 mark, which is the 20 EMA zone. Until we break that, I doubt that we can inch toward the upper band of this declining channel that currently we are trading in, which is around 23,800. So banking looks comparatively better. It's a buy on dip for banking. For Nifty is still a sell on rise. So it's a kind of a diverge move that we are seeing in the index, but that is how traders should plan or align their positions.
And what individual stocks are looking attractive to you, Ajit?
So Alex, considering the market tone, I feel that healthcare, pharma, and banking is something that you should be focusing on the long side, and then we have other opportunities on the short side as well. So from the healthcare part, Biocon, which has witnessed a decent rebound after this marginal pullback from the support area, we anticipate a gradual recovery towards 439 levels in the near future. So with stop at 408, one can look to accumulate Biocon. Eternal is in fact a shorting candidate after this failure of recovery or rebound retest of this major averages. So here we are anticipating a dip towards 230, 228 area in the near future. So here one can look for shorting opportunity with 247 as a stop loss.
Got it. Okay. Let's focus in on the stock of the day. And there are quite a few stocks that are buzzing in trade, but this one in particular stands out. It is Car Trade. And this is a stock that has gained as much as 12% today, or 11.5% right now, just a tad bit off the high point of the day. The question is, why is it buzzing? Let's go across to Puneet to find out. Puneet, is it the outlook?
Well, it's one of the key aspects is the outlook, but also it's been a very volatile journey for the company in the last 1 year. So you of course see that 11 to 12% move today. It's up 47% in just the last 1 year. But trading at that 2400 odd level, stock actually was at 1650 on March 30th. So you've seen almost an 800-point jump from the lows, but still down 25% from the highs of almost 3,290. So it's at a one-way swing up. It has collapsed again, and then again the second set of recovery just in the year itself. And the reason for that has been growth, which has been quite strong for the company as well. We should have the historical growth trend before the guidance, but we'll come to that in just a bit, because the guidance is about 1,000 crores in profits that the company wants to earn in the next 4 to 5 years versus 244 crores which they did in FY26. So that's point number one. And the other aspect is that the cash levels have already crossed 1,200 crores for FY26 by ending FY26, but they have said that they want to do no inorganic acquisition at this point of time. So they've just acquired OLX about a year ago, looking to revamp it, but very interestingly that they don't want to burn cash reserves in acquisitions and no inorganic plans currently. The other aspect is the new elite buyer program, which has been spread across its key consumer verticals. They feel that right now just about 0 to 5% of revenue will jump to 30 to 40%. This is the premium base, the higher base, and hence it's something to watch out for as well. Let's go across and see what the next plate is as well, because we have analyst coverage now, because that's on Kotak Institutional Equities. They've raised the target price to 2,300 on June 3rd. Mentioned that the stock corrected on AI disruption concerns, but they feel the dealer database is quite strong, and hence a lot more to offer for the company at this point of time. And finally, Citi, they had of course upgraded it on the back of higher OLX valuations. Citi has also done the same as well. But very interestingly, 9 analysts cover the stock. All 9 have a buy call, but seeing limited return potential of just about 11% at this point of time. And stock's trading at 34 times FY28, so it's pricey in terms of valuation also.
Got it. All right. Thanks so much, Puneet, for that. Very interesting tabulation there of the experience that you might have had if you held on to the stock. By the way, the stock cooling off even as we're speaking right now in single digits. The question to you, Dharmesh, is if you've looked at this analysis and if you've studied the company in the past, what's the view on it?
Yeah, Alex, good afternoon to you. The recent trend which I have seen with most of the management is they are playing out 4 to 5 years kind of a projection. And there the picture painted is very rosy. 4 years down the line, the projection which they have given 240 crores, 2,000 crores on a PAT is doable given the, penetration level of the four-wheeler industry into India, around 5-6 crores of cars has been sold into India so far in the last 20 years. And if you look at the addressable market is around 30 crores. So premiumization and migration to four-wheelers can happen. How much it will go to, sell a car, but that has to be seen. So we are not very particularly bullish on car trade. We have seen it, but always did not have the, conviction to go on with a report on a buy call on this. So we have avoided it. However, we are bullish on the OEMs. So, Maruti remains the top pick out there, along with Tata Motors on the passenger vehicle side. So TMPV and Maruti, any decline should be bought into from a structural and thematic play for the next 3 to 5 years. Volume growth so far has been very strong, and it's likely to be the case going forward as well.
Okay, let's talk a bit about FMCG companies, because that's where it's looking really exciting. Outlook has remained steady with premiumization driving volumes and volume-led growth. But having said that, reports today that there are price hikes that have been taken across categories. Let me go across to Mahima for more. Mahima, is that the reason we're seeing that spike?
Yeah, so yes, partially the reason. And plus, we've seen a lot of annual report and management key takeaways coming in that suggests positive growth outlook for FMCG companies as a whole. Now, I think it's at this point of time, it's important to take a look at what the key commentary and common commentary has been like. The first one, premiumization is the playbook, is the way forward from here on, and premiumization with a volume-led growth is what the management is aiming at. Margins will remain in the range as they were in FY26 because one, inflation, and two, management is expecting whatever gains in terms of margin happens will be reinvested in brand strategies and growing the brand at the moment. Balanced growth between pricing and volumes, of course, will happen, largely led by volume growth is what the common commentary suggests. Plus, urban demand is improving and the rural demand right now is stable, and that's something that could lead to growth going forward in FY27. Fewer, bigger and bolder bets. This is what a lot of companies are focusing on their key categories and premiumization, and that is going to lead the growth from here on. But overall, raw material inflation will remain the key headwind from here on, because that is something that could hamper margins as well as volumes. But in terms of where valuations go, we've talked about this as to how a lot of these names are trading below their 5-year average. For example, Tata Consumer trading at 52 times 1 year forward versus a 5-year average of 80 times. Something like an Marico at 46 times versus that of 54 times. Something like an ITC trading 1 year forward at 18 times versus that of a 5-year average of 23. I mean, if you take a look at a 2-year forward also for something like an ITC, it's at 15 times, which is, which has never been the case. So a lot of these names available at attractive valuations. Now, if you take a look at the Bloomberg consensus and see as to what are the stocks with highest return potential at the moment, you have Imami topping that chart with a return potential of 45%, Varun Beverages 27%, and of course Radico Khaitan also at the 27% mark, and then followed by GCP and Dabur both at 24% mark. So this is the overall view of what's causing the rally, and as to what outlook looks like for FY27 for FMCG names.
Okay, Dharmesh, I wonder if you're buying into the FMCG enthusiasm today.
No, Tamanna, I think it's more to do with our trading blip, which we are seeing in the FMCG space. And I mean, I buy all the thesis of the commentaries which the managements are making about premiumization.
Yeah, are you calling it a trading blip?
Yeah, definitely, yes, Tamanna. It's a trading blip. I mean, see, one thing which can add to, the consumption in light of inflation and the weak monsoon, still, the consumption may still be there, is the wage code revision. So through that, the take-home salaries of most of the people have gone up because the PF contribution has come down to 1,800. Many companies in the country have adopted that kind of a thesis. So your cash in hand goes up, which in light of previous dolouts like direct tax cut, indirect tax cut, and interest rate down, balances things out. But going forward, one has to be very clear. The thesis which is playing out in the market is valuation resetting based on the projected growth. So if you are doing it for historical thesis, like it used to trade at 80 times PE multiple, so it should go back to 50, 60 times. I don't think in next 2 years we are likely to see that kind of a reversion to mean based on 10-year, 15-year-old valuation multiples.
Okay. So then, and you've already pointed out the OEM, so I won't ask you to detail that further, but is that the only way that you're playing, Dharmesh, the consumption theme?
Yeah, consumption. See, OEMs, again, Alex, is a structural theme in the making. I mean, whether it's two-wheelers or four-wheelers, if you're buying that, But this year itself will be a difficult for automobile industry. What we are advising is buy on declines. The reason being, first half will be marked with higher input cost, which will be eating into operating margins. But the volume so far has been good. So on absolute reported operating profit, there may not be a big decline. But second half, the base will be very high. All the OEMs has reported 20% plus kind of a volume growth from September till March. So you will be fighting against that. And if this situation continues of this inflation, it will be a bit of a spot. But structurally, I mean, it can be a blip for some time. Eventually, things are going to go out. As far as consumptions are, concerned, OEM is one play, and other is consumer durables. I mean, the stocks have been beaten like LG Electronics and all. Getting into the festive season, we can see some traction building out there as well. And there we find the replacement as well as the new, buyouts will come into play. Because last 2 years particularly have been very dull for this entire space.
Okay. Just Ajit, want to get a quick view from you on the FMCG consumption story that we were just discussing on charts. Are you also finding this as a trading blip and uninteresting today?
So Tamanna, if you see that the price performance clearly reflects the overall scenario that we are in, means after IT, I guess FMCG is one of the consistent names wherein we are seeing underperformance broadly from majority of the stocks. So if you exclude a couple of names like Marico and Nestle India, majority of the stocks, they are reeling under pressure on witnessing selling pressure on every rise. So yes, selective buying in stocks like Nestle, Marico, Varun Beverages is something that one can look at. But largely, if we talk about the sector, the indications are in the favor that underperformance is likely to continue.
Okay. Stay on with us. Let me go across now to Hiral for a special report. We're putting the deep dive and spotlight on HFCL. The stock has seen a sharp run up, but are the fundamentals matching up? You're, of course, seeing some of a drawdown in the last week or so, about 11 or 12%. If you look at it from a monthly and then an annual basis, you'll see the extent of run-up in that stock, still about 20% up for the month. What are the fundamentals? Rich valuations and weak cash flows, among other things, are key concerns. Hiral coming in with that deep dive.
Thank you so much for that. Absolutely, if you see in terms of the last 5-day chart, you will see the kind of downtick that you're seeing. 2 days of lower circuit is what you've already seen on this counter, and 11 to 12% is the downtick that is coming over here. Now let's understand the performance. If you see in the last 2 months, April 71% up move is what the counter has seen, May 55%, and from its 52-week low, the stock is up nearly 250%. So that's the run up that we're talking about. But what are valuations telling you? If you look at the valuation math, it's trading at around 87 times price to earnings versus an industry median of 14 times, which is clearly telling you how expensive the stock is and the way investors are really paying heavily for future execution from here on. Very quickly, if you see the price to earnings and the ROCE of HFCL in terms of the peers, here your peer matrix is telling you that the price to earnings is expensive versus your return on capital employed is lower versus what the peers are giving you. If you have to look at the peers, we're talking about names like HFCL, Indus Tower, Altius Telecom, Pace Digitech, Bondada Engineering, and Vidya Telelink. All of them are in that range of 11 to almost 46 times, which is the highest, whereas HFCL is 87 times. Moving from here on, if you have to look at the cash aspect of it. Now, the profits have been constant for the company, but they're not really converting into cash. That's the problem over here. And growth which is coming in is becoming absolutely cash intensive. If you have to look at these charts as well, from FY25, your operating cash flow from a negative 45%, it's actually ballooned to negative 378 crores in FY26. And if you have to talk about your free cash flows as well, from a 454 crores, which has gone down to a negative 723 crores. Whereas your net profits absolutely the same in between FY24 and 26, 338 to 329. That's the number that you're looking at. Now your working capital has also come in under pressure. If you look at the working capital days, they've actually improved. They've worsened from 62 days to 212, which is 3.4 times. Your cash conversion cycle, 10.5 times is the kind of uptick that's come in there. And your inventory days, 3.9 times. So there is a cash crunch which is building up. This is what the numbers are indicating so far. And if you have to talk about the debt, The borrowings, it was at 783 crores in FY22. You see the chart, it goes up to 1,744 crores. So your debt has been increasing. Your interest cost has also been going up. And 1/3 of your profit now is going in terms of paying the interest amount. And that's the concerning area over here. Now, what we need to watch out for from here on is that with all of these concerns, if anything positive has to happen, then the execution needs to justify this 250 percentage points rally that we've seen from its 52-week low. Secondly, a very strong order book. 21,000 crores is the order book that HFCL has been sitting on, where defense, exports and AI-linked fiber, these three are the major opportunity areas for the company. So yes, run-up is very strong, order book is very strong, but the execution has to actually justify the valuation, justify the rally, because your balance sheet matrix are slightly off right now.
Very well put, and very detailed analysis there. Dharmesh, you've heard the numbers and you've heard what Hiral has put together. What is your commentary on this stock? Because a lot of people would have thought that they missed the bus because it was pretty much in a one-way rally higher, and now it's been correcting quite considerably. Right now it's at lower circuit. What would you do?
Alex, only two comments out there. One is, even if you take the profit for last 10 years and FY15, it has been the same. The range has been 330, 340 crores. It has never reached that. The other is, the last 2 years, the promoter holding has come down from around 39% to 28%. So 10, 11%, promoter holding has come down. And this company has a history of its own. So beyond that, no comments from my side. We don't cover it actively.
Okay, fair. By the way, pull up the benchmark Nifty 50 intraday chart, because from where we started this program as well, with gains of about 0.4%, we've erased quite a bit of that. In fact, most of that. We're trading just about flat. Pull up the heat map for the Nifty 50, and barring a few private sector banks that are holding out, it's a gash of red seemingly, and the cuts that you were seeing earlier for some of those stocks have gotten worse. Something like an Infi is now trading with cuts of about 2.9%. Hindalco in any case was under pressure, but some of those heavier weights, take a look at Reliance Industries, and perhaps that's going to explain quite a bit of this. Pull up the intraday chart for Reliance Industries. It is now trading with cuts of about 0.6%. So as a heavyweight that accounts for about 1/10 of the benchmark as a whole, when you were gaining about 2% at the start of trade today and now seeing cuts of about 0.5%, that is possibly where that pressure is emerging from. On the charts, Ajit, is this the considerable amount of pressure that we're seeing on the benchmark right now? And what would you say about the index and its most recent move?
So Alex, like what we have explained it earlier also, that it's just a breather that we were seeing in Nifty, thanks to the banking index, which has not only outperformed, in fact, it has witnessed a decent rebound. But at the same time, if we talk about the heavyweights, like you've rightly mentioned Reliance, IT majors, which have completely engulfed the move or the recovery that we were seeing earlier. And then we have stock from the FMCG basket also, like ITC, which holds considerable weight, Eternal, Bharti Airtel. All these names were putting pressure, or rather they were maintaining the negative tone despite this recent recovery in the banking. So that clearly shows that the recovery is also very shallow. At the same time, the downside, we still feel that there could be a rotational buying in the heavyweights. The pace of decline could be capped. Means we might again continue to see some buying interest emerging around 23,000 mark, but broadly the tone is negative. So that's something that one should be keeping a close eye on until we decisively reclaim 20 EMA mark around 23,550. I feel it's prudent that one should look for shorting opportunities on rise, especially in the Nifty index.
Okay. Let me just talk a bit about gold. And yes, in the middle of markets and in the closing hour, we're talking about gold, but there is some impact on gold financing companies as well. The reason we're talking about gold is that the yellow metal is under pressure despite escalating geopolitical tensions, with prices now slipping below pre-conflict levels as safe haven demand remains surprisingly muted. Rising US yields and a firmly restrictive Fed outlook are weighing on bullion, while technical breakdowns and weak investor flows add to the downside. Brokerages like Citi have turned cautious in the near term. Even as longer-term bullish bets remain intact, we're now joined by Kunal Shah, Head Commodities Research at Nirmal Bang. Kunal, thank you so much for speaking with us today. Logically, when you have an elongated period of geopolitical crisis, gold should start showing some strength as a safe haven commodity. Why is that not happening this time round?
It's a very good question to start with. The reason for that is gold has risen by 70% in the year of 2025. So the gold prices have entered in a corrective phase and a consolidation. So like you rightly said at the start of your show, the long-term fundamental trend for gold continues to remain very bullish. But in a shorter term, the rising bond yields, the rising inflationary expectation, raising the prospect of the rate hikes across the globe, these are the factors which are pulling investor down. We must not forget about what has happened, what our government has did. The gold imports are going down. So the Indian gold imports are going down. India accounting for one of the major consumer of gold, and if we are not importing, that is going to create some vacuum in the international market. That is also a factor to watch out for. More steps are likely to be taken by government to further curb the imports of the gold. So these are the factors which are weighing on the gold prices. But the good news is that gold prices have corrected. And generally what happens whenever there is correction, people wait for more correction and they don't buy. But I believe that from here, the maximum downside, what we see is another 3 to 4% downside. So $4,000 remains very good levels to re-enter the long position for the structural bull run which can take place. This is a good opportunity because if you look at the Indian prices, you must factor in the 10% custom duty hike, what we've seen by the government. So if you take that out, gold prices are already at 1,40,000 at the peak, which was somewhere at 1,86,000. So another 3 to 4% correction from here. All eyes will be on today's CPI data from the US. And I believe that gold is definitely going to witness some correction in near term, but this is a good time to enter in long position for the longer term perspective.
Interesting. I like the way that you've described this, Kunal. But over the last 2 years, and good afternoon, this is Alex here. Over the last 2 years, some of the traditional dynamics for precious metals and gold in particular have had to be thrown out of the window, right? Gold prices not moving up when they are supposed to, moving lower when they're not supposed to. But having said that, one traditional view is when bond yields go up and the dollar strengthens, which is what we're likely to see going forward as well as monetary policy in the US tightens, gold will have a negative view, right? Or you'll have a negative view on the pricing of gold. Is that not likely to take place this time around?
Yeah, it's a great question. But I look at this question from a different point of view. So let us say the bond yields shoot up by another 30 to 40 pips from here. I think at that point, US will have no choice but to infuse liquidity in the market to bring down those short-term rise in the bond yield. Because the only thing what US cannot afford right now is a sharp surge in US 10-year or 20-year or even 5-year for that matter. Because that is going to create big problem for them. They are sitting on a 40 trillion debt. And if, let us say, the bond yield shoot up by another 30, 40 pips from here, their debt servicing will shoot up and they will be left with no option but to print or to infuse liquidity and bring those yields down. So I believe that whenever bond yields rise and gold prices goes down, that is an opportunity for investors. All the traditional, like you said at the start, all the traditional theories have gone for a toss. Okay, ever since from last 3 to 4 years, we are in a multipolar world. We are not in a globalized world anymore. And all these traditional theories, higher geopolitical uncertainty, higher gold prices, all those theories have gone for a toss. So I believe you should look gold as with a fresh view. The hard asset trade will continue to dominate in years to come because the world is searching for an alternative currency. The US dollar as a reserve currency is gradually losing its sheen. It is going to remain a reserve currency, but it is losing their sheen. And if you look what has happened, there is a complete divergence. The US bond yields have been, the bond holdings of the global central banks have been going down, and gold has surpassed that. So the structural story will continue to remain there. Hard asset trade is there is a pause right now because of what is happening with the inflation globally, and that is on account of what is happening at Strait of Hormuz and between US and Iran and Israel. So even if this factor continues, I believe at some point gold will stop reacting and it will find a good floor. And the people who have missed the bus, for them, this is an opportunity rather than to be fearful. Try to find an opportunity in this fall. $4,000, $4,500, $4,050. I think these are the great levels to build again long position. And I think not extraordinary, but gold will be poised to give you 15% CAGR return for next 2 years.
15% CAGR return. I mean, it's better than what most fund managers can talk about. Kunal, very simple question. ETF, the best way to go about this in your view, and what are the targets that you see for gold?
Yeah, so gold ETFs, obviously the best way to invest right now. There are a lot of schemes which are putting restrictions because of the what government has come up with. But I think still gold ETF will continue to remain one of the best options to invest in gold. And my targets conservatively, if you buy at 4,000, by the end of the year, you can see gold somewhere at $4,800 to $4,900. And by next year, 5,400 to 5,500. So conservatively 10-15% return is something, it will keep giving you. And these are the times, generally these are the times when the opportunity comes. Everyone is, now everyone will start to talk about $3,500. But we have already seen a 50% correction from the peak if it comes to $4,000. So these are great time, rather than being fearful. One should buckle up and really start building position. Don't worry about the short-term pain, but these are the good times to enter.
Good times to enter. You can't be clearer than that. Kunal Shah, thank you so much for joining in and giving us perspective of that. If you missed the first part of the gold rush, this is the second one. Please be clear. We're not telling you to go out and buy gold. Remember, the government is telling you not to buy physical gold. You don't want that import bill for India to blow up. So digital gold is the best way to actually make those investments. Having said that, gold financiers are under pressure, tracking a sharp fall in gold prices, and also after news reports suggest that the finance ministry has sought information on gold loan lending from banks. Shivam joining in to tell us what's going on with some of these stocks.
Yeah, few of the key reasons that the gold financing stocks are down is the rise in the gold prices in international market, which has further exerted the downward pressure on gold on MCX and gold financing companies. Now, profit booking is also one of the key factors that have added to the decline. Technical indicators also remain weak, and additionally, according to the media sources, the finance ministry is seeking data on gold lending, which has created a caution too. On the macroeconomic indicators side, the ongoing geopolitical tensions like the US-Iran has created the pressure in the price, and the higher crude oil prices are also adding on to the that. Interest rates and bond yields have been remaining higher on the globally, and the strong US dollar is also reducing the appeal of the gold. Now, what will be the impact of the gold loan on the gold loan companies? The falling gold prices will result in the decline in the value of the collateral that the company holds against the lending, and this will also result in the loss given default at a higher rate. Now, looking at the gold price movements in recent times, so the gold has declined around 8% on month till date basis, and nearly it has corrected around 25% from January 2026 highs.
Yeah, absolutely. Okay. All right. Thanks so much for that, Shivam. Dharmesh, I want to come to you on a gold financiers, and ultimately there is always a sensitivity to gold prices, right? And there is a sharp move either one way or the other based on what gold prices do. They've maintained, and Muthoot on an ongoing basis has maintained that they keep their loan to value, which is ultimately the value of what they lend as per the collateral that they receive, at very close to that 60 mark or even below that. So it's not really a problem. What do you think about them right now?
Yeah, Alex, I mean, very true. It's absolutely 60% is the benchmark which both of them sacrosanctly hold to. And I don't think there's a NPA-related issue or something like that will happen because they are more than secured. But structurally, I just heard Kunal saying that 70% kind of a movement in gold price was there last year. So typically what happens if you look at 10, 20, 15 year kind of a period, so couple of years for gold price hike when the gold goes for an up toss, it's there and then it goes for a sideways kind of a consolidation with correction setting in. I think this is a phase where some correction is setting in. So next 1 year would be difficult for if you are pure play gold financier kind of a company based on the growth rate, because we have already seen a couple of good years of lending happening out there. Secondly, if you want to play it out, then there are multiple options in the banks itself. I mean, most of the banks have started providing gold loans, and Federal Bank, I think, is a much better, place to where you can play both as a direct lending as well as gold lending. So we are not advocating, just pure play gold financiers at this juncture.
Okay, let's talk about, I would say, a stock that has gotten completely hammered today. That's Oil India. And here's what's happened. Pull up the intraday of that stock and you'll see kind of drubbing it's taken. This note came out this morning actually. Morgan Stanley has downgraded the stock to an underweight from an overweight. Look at the drop in target price by Morgan Stanley. Their target price earlier was 566 rupees. They've downgraded to 404 rupees. The stock is currently at 427 rupees. Now, what is the reason? They're saying delayed natural gas, average selling price increase, lower refinery margins until fuel retailers recover their current losses, potential discounts on diesel sales after the 3x rise in refinery capacity as India reaches a diesel surplus as early as second half of 2027 is what they see. Slow increase in domestic production growth should surprise the street negatively in coming years after 50% 2027 EPS estimate cuts year to date. They see a 6 to 7% downside risk to street estimates as oil prices normalize once the Middle East conflict ends. Harsh outlook there for Oil India coming in. Dharmesh, I wonder how you're seeing Oil India and a cohort of those stocks which could be impacted for the same reasons that they're talking about Oil India, and especially the part about crude prices normalizing very quickly once this ends.
Yeah, Tamanna, I mean, that would be a big blow. And last time also, when I was on your channel, we were very clear that be it downstream or upstream companies, we are not touching any of the oil plays, be it refiners or, upstream plays. The reason being, if you see, I mean, the current data shows the last month, the world consumption of oil dropped to 104 million barrels per day from 106. So there's a contraction happening, and it has speeded up the, adoption of renewable energy and other form of energy as a replacement of fossil fuel or crude oil. So we have been structurally, it was already in a downtrend, and if this things normalizes, our own sense is oil will fall below $60 a barrel, given the kind of contraction we are already seeing in the consumption space. So, I mean, if you were lucky to get at a lower level, book your profits and be out of it.
Got it. All right. On that note, gentlemen, thanks so much for joining in. Ajit, Dharmesh, pleasure having you. But to slip into a very quick break, as we do, just mark the benchmark Nifty 50. It has slipped into the red. It was threatening to do so. It finally has. But it's hovering very close to yesterday's close. We'll come back on the other side to talk about a cohort of stocks that's holding it where it is, and maybe a few others that are putting pressure on the benchmark. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury.
Okay, welcome back. You're watching India Market Close, and we're definitely having a seesaw kind of a day. We talked to you about this on the opening show this morning, that we're looking like we're going one step forward and two steps back. So you're about 200 odd points off the day's high at 23,425. But also pull up the chart to show the current price if we can. And look at what's happening with the Nifty. So it's not a big plunge, but definitely losing momentum from the day's high, just about 20 points down right now. What's doing relatively okay are private banks. I actually want to look at some of those private banks on the intraday and see where the pain is coming in from. Let's pull up Nifty contributors as well if we can. HDFC Bank is doing okay, about 1% up. But in Nifty contributors, what's dragging down the markets even more is an Infosys. Bharti Airtel has also joined in. Can you give me the intraday chart of Bharti Airtel? Just want to take a look at what's happened there. Is a bit of a dive come from Bharti Airtel? Yes, there it is. That's one of the culprits there. Infosys was anyway showing a 2% weakness. Let's pull up the intraday of Infosys as well. And yeah, that's continuing to be weak. But yeah,
RIL as well.
Reliance Industries is already weak, but has it dropped more? Yeah, it's at the lowest point of the day right now. So it's just some of these heavyweights which is showing that pain coming in. But the reason private banks are up is because of what they have announced today. After RBI's measures and leeway on FCNRB deposits for NRIs, banks have started hiking interest rates for this particular product. These are basically special deposits that NRIs can make. So these rate hikes have been announced with HDFC Bank, Yes Bank, already increasing the rate. Punjab National Bank has increased it as well. Piyush joining in with more details.
Banks have actually started hiking the interest rate on 3 and 5 year tenure FCNRB deposits. We have seen banks such as HDFC Bank, AU Small Finance Bank, Central Bank of India and Yes Bank and CSB Bank hiking their FCNR deposit rate. These are the first lenders to take the lead in hiking the FCNR deposit rate. Now depending on each bank, the hike that has been done is around 175 to 325 bips, which is on the higher end of the expectation that economists had. And if we see HDFC Bank and Central Bank have raised their FCNR deposit rate to up to 6%, whereas Yes Bank and AU Small Finance Bank and CSB are offering an interest rate of as high as 7.1% on 3 and 5 year tenor FCNR bonds. Now, why are banks going aggressive? First, lower borrowing cost, as the RBI is managing all the hedging costs for these fresh FCNR deposits, and second, the more deposits the banks get, the more credit they can provide to the financial system. And apart from that, we have seen the RBI has also given some dispensation on these deposits with regard to SLR and CRR. So banks are finding this a very attractive sort of offering for their investors, and are offering rates as high as 6 to 7% on the fresh FCNR deposits.
Today morning only, in fact, first you are the first channel where I am going to announce. Today morning we had that ALCO committee meeting, and we have finalized the rate for 3 years, 4 years and 5 years. Up to 1 million FCNR deposit rate will be 6%. 3 to 4 year period will be 6.05, and 4 to 5 years it will be 6.10.
Okay, Shivangi Sada joining us in on this leg of the conversation. She's analyst, equity derivatives and technical at MOFSL. Welcome, Shivangi. Sudeep Bandopadhyay, market expert, also joining us on this leg of the show. Sudeep, I'm going to talk to you about private banks simply because, we've addressed that story right now. FCNR deposit rates have been going up. You've seen a lot of those banks talk about what those rates are. For 5 years, for Punjab National Bank, for example, it's 6.10%. Now, this is better than what the street was also expecting in terms of the kind of hikes they would give. Do you see this as an advantage for banks overall?
Fantastic opportunity for the banks. I would especially single out HDFC Bank. They had a structural problem post the merger with HDFC Limited, and they needed to mobilize and still need to mobilize quite a lot of deposits to be in a position to continue their lending and grow the loan book. And there were challenges in deposit mobilization. So this is fantastic for HDFC Bank, and I expect them to go all out and garner as much as deposit as possible. So offering attractive interest rate to NRIs for this deposit scheme is definitely warranted. This actually brings down the overall cost of funds for the bank, because RBI is taking the hedging costs. Some favorable dispensation on the SLR, CRR also will help. And of course, this will enable them to lend more. It's also good for all the other banks, including PSU banks. And that's why we are seeing this excitement in deposit mobilization. As a country, I think through this FCNR plus the ECB scheme, we are looking at $78 to $80 billion mobilization, which will kind of repair the deficit which we have in our current account.
Okay, I want to get Gurmeet's view in it as well. He tracks the space closely. He's managing partner and CIO at Complete Circle. Gurmeet, we're talking about banks here. We just had one comment that HDFC Bank could be a key beneficiary because of what has happened in these FCNRB deposit rates going up. Do you concur with that? Do you see any clear advantage to some of these banks? And does PSU have it better than private or the other way around?
No, I think it's this. I mean, anybody with good NR presence, NR book stands an advantage. I think in
In relatively smaller size bank, I think Federal Bank has a very strong NR book, especially Middle East. SDFC and ICICI also have both in Southeast Asia as well as overseas, ICICI in particular. So there'll be some advantage. We need to see leverage some of these banks offer vis-a-vis the foreign banks. A lot of these foreign banks run a country-specific line, and they are able to offer far more leverage, 6, 7, 8, 9 times sometimes to arrive at a double-digit yield on dollar. Borrowing money in Japanese yen, LIBOR plus 100, 200 basis points, and then giving some spread. So we need to see how much. I think MNC banks also will mobilize a lot of deposits, the likes of HSBC, Standard Chartered in particular, and some of the Indian banks also will do. The game is more of leverage here, but I think it's a clear plus in terms of mobilizing some of these deposits with RBI hedging it and getting some cost of funds also lowered. Even some of the PSU entities will take the ECB route in terms of doing dollar-denominated bonds and do that. So I think it will be a win for most of the sector. But banks like ICICI, SDFC, Federal in private banks have a larger NR base and may get slightly higher benefit.
Gurmeet, hi, Alex here. So a couple of questions, right? From the bank's perspective, you just described why this is beneficial. All of these guys are doing 300 basis points of an increase in the rate. So they're effectively passing on the benefit of that currency hedge being provided by the Reserve Bank, right? So that's one. Two, from the perspective of the NRI, how much can you explain why this is something that is very positive and should be considered?
So, a lot of these NRs, RBI has also allowed that deposit to be used as collateral for giving credit if you see the operational guidelines, which means, let's say, for example, Japanese LIBOR is, let's say, 3%. I'm just taking, it could be anything. It could be even in Swiss francs or depending on where the cost of funds is lower for that particular bank. You can borrow at, let's say, a particular LIBOR rate plus 100, 150 basis points, where the cost of borrowing could be, let's say, 4.5%. And you're getting, let's say, an FCNR deposit, let's say, around 6%, from 3-4% to 6%. And so you have a spread of 1.5%. And if you leverage it number of times, if let's say you do 6-7 times leverage, you can go to double digit, with obviously you run a bit of a currency risk in terms of sharp movement here, but over a 3-year period, let's say you're doing the deposit, a lot of that gets negated. So, and here MNC banks tend to offer more leverage than Indian private banks, and that's why I think some of the MNC banks will also mobilize, and depending on and every bank has a country-specific line, like X $billion for HSBC or Standard Chartered. So I think the game is more leverage rather than, say, for 6% dollar deposit, non-leverage, it's not as appealing. You are still getting 5% on some of the money market funds in dollar terms, right? So I think once the leverage comes, this 6 becomes 8, 9, 10, 12, depending on the number of times of leverage, and that's how it becomes more attractive.
Okay, so on the leverage rate. And then, as you've described it, for the banks that will benefit, those that have a pretty substantial NR presence, is this 1 year down the line going to be a significant benefit, in your opinion, on the cost of funds standpoint and margins as well? Because if we have hit the bottom of the rate cycle and we're heading higher, even at the end of the year, one would assume that even NIMs might have bottomed out?
It looks like, but as I said, the benefits will take time to accrue. There has been a little bit of an upward pressure on yields, which, if you see the short-term borrowings from banks, have gone up quite substantially in Q1. Look at the 3-month CDs at which banks are raising money, and 1 year short-term borrowings banks are doing at a CD level. Those prices have gone up. So may not reflect in this quarter, but definitely once you, assuming we do mobilize 30, 40, 50 billion of dollars in the banking system, eventually it will have an impact of, at least 5-10 basis points on NIMs for banks which are able to do that. As I said, with higher NR base and who are able to mobilize a higher share.
Gurmeet, what is your pecking order for banks in this context, and who will do the best?
I think federal banks should do well. There's also been a change of leadership there, and it's been an outperformer. Assuming, and I think ICICI Bank should also do well. But the issue with larger private banks has been FII selling, Tamanna. And I think it's now reaching a point where, to me, it's not making much sense But end of the day, markets are supreme, and you have to respect what market does. And I think this relentless FI selling, and they still own a lot of banks right now, especially the top banks, including some of the PSU banks. And whether they are making space for SpaceX, whether it is an AI trade, fact of the matter is we are losing 4,000-5,000 crores a day, and a lot of it is from these top private banks and IT companies and the Reliance and Airtels of the world. And I think this has to stop for all these things to start getting reflected on the screen. Hopefully, I think we are reaching to a point where I think it's looking oversold, but let's see how it goes. Very difficult to say at what time the tide will turn.
Okay, thank you so much for that, Gurmeet, and for joining us with those views. We're just about 8 minutes left to go for markets to close. Shivangi, any BTST ideas?
Absolutely. We've seen the banking stocks in buzz. So, of course, the BTST would be from this space. Of course, we've seen a little bit of a fall from the higher levels, but overall, Axis Bank looks quite positive, and it is, on the verge of the previous hurdle zones. It did surpass it today with a little cool off in the last hour. This one looks positive with good amount of short covering. So, Axis Bank on radar for the next target of 1350 immediately, and with a support of 1290 levels.
Okay. I also want to get a Nifty view from you, Shivangi, after the kind of loss that we've seen in the last half an hour of the highs of the day, actually at the day's low just a few minutes ago on the Nifty. The Nifty and the Bank Nifty, what are the levels that you're seeing? Both have given up a lot of the gains through the day.
So overall, we've seen volatile cues are continuing in the market, but Nifty, if we talk about, it has been kind of underperforming from the last few sessions. In fact, we've seen that from the last 8 odd sessions, follow-up has not been respected here. So some bit of consolidation and pressure would continue over here. 23,000 would be an important base to look at on an immediate basis. Positional supports are at 22,850 levels, with an upside hurdle intact at 23,550 marks. Talking about Bank Nifty, here, of course, we've seen some bit of profit taking at the higher levels, but strength is likely to continue over here. We've seen a good amount of buying interest from the last 5 odd trading session with buying at any small declines. In fact, very smart buying here. So heavyweights should do the heavy lifting, and the next levels that I'm looking at for Bank Nifty is 55,750 and then 56,000 levels with a support near 54,750 marks.
Okay. All right. We've been talking about auto for a few days now, and that's on the back of pretty robust retail sales data that has come through in the face of quite a few challenges. So let's head across to Puneet for a sharper look at what's working in the sector and the few themes that are at play. Puneet?
Well, thank you for that. The 3 ones that we're picking out, 8 months post the GST rate cut, you're still seeing structural themes being formed in. And these are the ones, 2 of them in the car market that we are seeing a structural change happening. Rural sales outpacing the urban markets now. CNG and EV car sales are booming because of fuel price hikes amongst others. And the two-wheeler EV market has also jumped by 300 basis points for the EV space specifically. So when you look at the first key point and what it actually means, this is the growth that we are seeing, 30% in the rural market on a YY basis for the month of May, compared to May 2025 versus 18% for the urban markets. Overall growth very strong at 23%. What it actually means is that the small car market has now come back very strongly after a hiatus of almost 6 years. You've also seen dealers point out that there will be a coexistence now along with the SUV mix, and Maruti's market share has inched up meaningfully in the month of May to 40.9 versus 37.8 on a YY basis. The second key one is on CNG, and what you have to watch out for is the numbers. So it's jumped to 23% of overall car sales out of 100 that gets sold in the country versus almost just 20% in the month of May last year. And then is the last row for EVs, jumped to 6.6% versus 4.5%. What this data means is that out of 10 cars, 3 of them are now in the cleaner and alternate fuels. CNG is contributing 30% of that, and the fuel price revision has actually accelerated this shift. And a big beneficiary, surprisingly, along with Maruti, is Tata Motors. Massive market share shift of 160 basis points on a YY basis. And finally, the third key trend on the two-wheeler EV space. Majority, of course, being driven by petrol, but the mix has now jumped to an all-time high of 9%, which was 6% earlier in the same time last year. And what this means is that structural growth in EV is here to stay, and TVS and Ather are gaining market share. Finally, what you have to watch out for also, price hikes will be impacting demand. That will be something to watch out for. But the EV momentum for entry-level cars and two-wheelers continues to be strong. But what's very interesting is hybrids have not seen that growth yet. So globally, it's a play, but still yet to play out in India. And that's the key takeaways from what the sales data is pointing out from people like you and me purchase right now.
Okay. Will those purchases stay up, really, is the question. Sudeep Bandopadhyay, May was a great month for the entire OEM pack. We haven't seen the impact yet of any consumption pain, West Asia crisis, fuel price hikes. All of that is not being seen yet. Would you bet on this momentum continuing?
Well, to some extent, yes, but I'll be a little cautious as well because, we are heading into an El Nino induced monsoon deficit, which will have definitely some negative impact on rural consumption. And as we have just seen, the rural demand has been growing much faster. So I estimate that there will be a bit of a slowdown as far as rural demand is concerned. But these trends will continue. I completely agree with the trend that small cars, SUVs, as well as EVs will continue to race ahead of the other modes. As far as two-wheelers are concerned, we do like Bajaj Auto. They are in EV. They also have a significant export business. And with the dollar doing what it is doing, we believe that Bajaj is in a very, very strong position. We also like TVS and Ather. I think all these three from a two-wheeler perspective can be looked at. As far as passenger vehicles are concerned, we do like Tata Motors PV because at the transition where they have been a beneficiary. We also like
Maruti as well. Sudeep, apologies, I'm cutting you off because it's just about a minute to go. But thank you so much for joining us today and for speaking to us and to you as well, Shivangi. But we're ending likely at the low point of the day with cuts of about 0.1%, but this is the benchmark Nifty 50. The problem lies in the broader markets, and that is evidenced by what we're seeing here. This advanced decline ratio that has worsened even in the last 1 hour.
Pull up the intraday of the mid cap and the small cap, and you'll see where the cuts have come in from. There you have it, that deep dive over there on the mid cap 150, and the small cap actually pretty much the same, all closing at the lowest point of the day. So if you were closing at the highest point of the day yesterday, it's completely reversed. Let's pull up the Nifty heat map quickly, and then we'll get to the sectoral heat map to show you where the pain points are. Nestle, HUL have now come to the top of the pack. Axis and Kotak Mahindra Bank holding on, but Hindalco, the cuts have deepened. So has Coal India, so has Infosys now closing 3% down. So the weak ones have gotten even weaker. India VIX is frankly okay, so no big issues there. Brent is still under 92, but the sectoral heat map will also give a clearer picture, Alex.
Yeah, let's pull that up, in fact. And you will notice FMCG on the top of the list, but gains of just about 1% or so. But the energy pack, and that's because of Reliance Industries, that is down as much as 2%. Reliance Industries ending the day with cuts of about 0.9%. So the swing intraday is as much as 3% from the high point to the down, and media losing ground. Realty once again making it to the bottom of the pack, down about 1.7%. And metal as a cohort, as a pack, has done particularly badly today. Whether you talk about aluminium or you talk about the ferrous metal names, they've all done badly.
Let's pull up the top gainers and losers in the broader markets before we wrap out of the show today and look at what's happening there. Okay, the rupee was actually a good chart to show. We can show it for a few seconds more if you want to go through it. But the rupee is ending okay, slightly off the best levels of the day, weakening a bit, but 95.26. Let's go to the BSE gainers and losers while we're at it. And Oil India actually is the one which has gotten hammered with a very critical note from Morgan Stanley. NLC, their offer for sale has now opened up. They've expanded it another 6% down. Manappuram Finance is mirroring what's happening with gold prices globally, as well as some other concerns about whether there's going to be scrutiny from the finance ministry. Sterlite and HFCL are both the kind of stocks that have boomed so much and now seeing a selling spree. Rajesh Exports those concerns about what's been happening with Rajesh exports continue after that SEBI order in KNR construction coming off as well.
Yeah, and among the gainers, you have Easy Trip Planners that stands out as one of the top gainers. You know, I've seen CCL products make it to this list quite a few times. We'll have to speak to the management to see what is really happening. Up about 4%. Raymond is doing okay. AB Sun Life. No real big theme that you say. Berger Paints is up about 3.4%, I guess, to a certain extent. You can say that crude is no longer above $100.
Fertilizers, a little bit of fertilizers.
Okay.
Yeah, Chambal fertilizers doing okay.
Chambal maybe. And Berger Paints, I would think, is the crude angle. Maybe. It's not as high as it has been in the past. That's the only reason I would think. And the ability to pass on price increase.
Okay, so a bit of a mixed market closing, fairly muted. Important data coming out tonight. The US CPI data for May will be crucial to watch out for. That will also inform what global markets look like overnight and maybe a bit of the morning. But otherwise, we'll have another day where we're perhaps just chucking along. But for now, that's all the time we have from Alexa and the team that put the show together. Thank you for watching. Stay tuned. All of the action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that has happened thus far in today's trading session. But first things first, let's take a look at the markets then. A muted day on the Lal Street largely is what you were looking at. Benchmarks also really ended flat. Nifty holding above that 23,200 level despite seeing some bit of correction, especially towards the second half of the session. Now, when you talk about Sensex, managed just a marginal uptick, as you can very clearly see on your screens, as well, and broader markets also underperformed. Let's also talk about a tale of two sectors on the street today. FMCG names clearly in charge, remaining resilient despite an otherwise tepid market and leading the gains with steady demand plays also coming in. On the flip side, metals and energy stocks dragging their feet, really weighing on the overall momentum. Like I said, let's talk about FMCG stocks in greater detail now, because they led, in fact, the market higher, especially in the first half of the session as easing crude oil prices improved sentiment across the sector. The rally was driven by renewed investor interest in domestic consumption plays and defensive businesses amid broader market uncertainty. Heavyweights including HUL, Nestle, ITC were among the key gainers here as well, and you do have buying interest that also extended to names like Britannia, Dabur, Marico, Godrej Consumer Products and Colgate Palmolive. Lower input cost concerns and improving demand expectations really helped the sentiment across the FMCG space. Let's also talk about the entire fertilizer pack that was in focus. In fact, India's fertilizer subsidy bill could be headed for a record high, and the Fertilizer Ministry is seeking a 100% hike, taking the allocation from somewhere close to 1.7 lakh crore rupees to nearly 3.4 lakh crore rupees for FY27. The proposal is currently under review with the Finance Ministry, but a higher subsidy outlay would really help shield farmers from some of the volatile global fertilizer prices that we've seen and also rising input costs amid the Middle East conflict. Let's also talk about Afcon's Infra that has bagged a major order for the upcoming Vadhavan port in Maharashtra. The company has received over 5,000 crore rupees in terms of this contract that I'm talking about to build a 10.14 kilometer long breakwater. And once completed, this will be the second longest breakwater in the world. Let's also move on and talk about something like a Quality Power that is making it to our list. About 1% uptick coming in on this particular counter, set to acquire 100% stake in Win-Win Specialty Insulators. And the acquisition really strengthens its capabilities with insulator manufacturing of up to 1200 kV as well. And it also adds a fully automated production facility along with somewhere close to a 47-acre industrial land parcel. Let's also talk about Concord Biotech that was buzzing away in trade with about a 4% uptick coming in on the back of US FDA's approval for a drug that is used to treat autoimmune conditions, including rheumatoid arthritis as well. And the approval really provides the company access to a significant opportunity in the United States where the market for the therapy remains sizable. Now, the development strengthens the company's presence when it comes to immunology segment and also expands its portfolio when it comes to regulated markets. The company, in fact, is expecting this particular approval to really support future revenue growth while enhancing its position in the global specialty pharmaceutical space. And that's exactly why you saw the stock also buzzing away in trade. Let's also move on and talk about CleanMax in terms of the shares. Really continuing their strong upward momentum, as you can see on your screens, with that almost 11% gain really coming in, extending gains for a 7th straight trading session as well. And the stock has rallied more than 20% over the past week, supported by positive investor sentiment, some of which you can very clearly see being reflected on your screens as well with that shade of green following a major partnership announcement. When you talk about this particular company, it's partnered with Meta to develop renewable energy capacity of close to 900 megawatts, marking a significant step when it comes to expanding its clean energy portfolio. And the agreement is also being viewed as a key growth catalyst when it comes to this particular counter, reinforces the company's position when it comes to the rapidly growing renewable energy sector as well. Let's also move on and talk about reports really suggesting that the government is open to fresh bids for the IDBI Bank stake sale and may also ask existing bidders to really revise their offers. Now, the government is also expected to cut the reserve price substantially to make the deal more attractive while remaining committed to privatizing IDBI Bank and will consider all possible options to really push the sale forward. Let's move on and talk about Inox India, and the shares really surged sharply, as you can see on your screens. 10.2% uptick coming in, extending their winning streak to a 7th consecutive session. And the stock has gained nearly 40% during the period, driven by strong investor interest following a key order win also from a US-based space company. The development has strengthened confidence when it comes to the company's growth prospects, particularly in its specialized cryogenic solutions business. And management, in terms of some commentary coming in from them, they've indicated that similar high-value orders could really materialize in the coming quarters, further improving visibility when it comes to future revenue growth and order inflows. Let's also move on and talk about Macquarie, that has reiterated its outperform rating on Lenskart and raised both its earnings estimates and target price, and citing some of that sustained growth momentum in the country and improving international performance. The brokerage is believing that the growth tailwinds seen over recent quarters are sustainable and also expects some of that strong EBITDA expansion also over the coming years. Macquarie also, in fact, highlighted the promise of Lenskart's international business, noting that performance is tracking ahead of what the company achieved in India at a similar stage. The brokerage, in fact, is also highlighting that they're expecting earnings to see significant growth over the forecast period. Let's move on and talk about Nuvama, that has maintained its buy rating on Indigo and raised its target price, citing the airline's strong long-term growth prospects. The brokerage also believes that Indigo, in fact, is well positioned to turn near-term challenges into opportunities, supported by structural growth in air travel demand. International operations are expected to be a key growth driver here as well, and the airline's large aircraft order book, also something that they talked about, providing strong visibility on future capacity expansion. Nuvama also highlighting that Indigo's cost leadership and growing ancillary revenue opportunities, which could further strengthen profitability over time, is also something that makes it to their radar as well. Let's also move on and talk about JP Morgan, that has maintained its overweight rating when it comes to HUL following a management interaction. So about a 2% uptick coming in on this particular counter. And you do have JP Morgan really highlighting some of that confidence in the company's growth outlook. Management is reiterating a stable demand environment supported by calibrated pricing actions and a resilient rural franchise, continued urban premiumization as well, in the company's organizational restructuring. Let's talk about that as well, because that paired with focused omni-channel strategy are really expected to improve execution across business segments, and that's the word coming in from JP Morgan. In terms of some other key growth drivers, they're talking about that being premium beauty and well-being brands as well, liquids within home and personal care, and the expanding foods portfolio. So that's something that makes it to their radar, and they're also believing that an improving revenue growth trajectory could really act as a next major catalyst for the stock. Let's also keep it going with brokerages and talk to you about JP Morgan in terms of their stance coming in on Aegis Logistics, and they're maintaining an overweight rating here, talking about raising the target price as well following a management interaction. And the brokerage is noting that LPG supply conditions are steadily improving with shortages easing. In recent months, management expects healthy EBITDA levels to be sustained through operational efficiencies and improved procurement. Aegis, in fact, has also diversified its LPG sourcing beyond the Middle East, strengthening supply security. And you do have the brokerage really highlighting strong growth prospects when it comes to gas distribution volumes, supported by capacity expansion and infrastructure projects, and has consequently also raised its earnings estimates for the coming years. Let's move on and talk about India's fuel consumption that dropped 6.5% in the month of May, hit by high prices and global supply concerns amid the Iran conflict. You do have petrol and diesel that saw muted growth coming in. Aviation fuel demand stayed flat, in fact, and airlines cut flights, and that's the entire context that you're looking at for this particular fuel as well. But on the other hand, cooking gas consumption fell sharply and naphtha demand really plunged, with more supply redirected towards LPG production. Let's also move on and talk about DGTR saying that India is awaiting an administrative review of steep US duties on solar cell imports, in fact imposed in the month of February. These include tariffs of up to 126% on shipments coming in from India, Indonesia and Laos as well. And officials are adding that Indian exporters are likely to participate in upcoming hearings as part of the US probe. The government, in fact, is closely tracking this particular case, with the review outcome expected to really determine the way forward for India's solar exports to the US. Let's move on and talk about India's also considering additional steps to protect its steel sector as well, including possible anti-dumping and safeguard duties. You do have officials, in fact, saying that more measures are currently under investigation, even as several trade remedies are already set in place. Now, these include ongoing efforts to really shield domestic producers from cheap imports. However, authorities caution that fresh anti-dumping and safeguard duty probes typically take up to a year before any final decision is implemented. Let's also move on and talk to you about some business news. Mutual fund inflows slowed noticeably in the month of May, reflecting a more cautious investor mood amid market fluctuations. So you do have equity fund inflows that really declined sharply from the previous month, with both mid-cap and small-cap categories witnessing a moderation in fresh investments, while retail participation remained strong. You do have SIP contributions that saw a slight month-on-month dip, also about 1%, after hovering near record levels previously. Passive investing also lost a little bit of momentum, with index fund inflows really softening compared to April. Meanwhile, gold ETFs, that's also a very important story here, because they've recorded net outflows after attracting strong inflows in the previous month. The latest AMFI data is suggesting that investors continue to participate in markets but are becoming a little bit increasingly selective in their allocation. Let's also talk about Anthropic that has launched Fable 5, its latest AI model designed for coding, analytics, and even advanced reasoning tasks. The company said that the model incorporates built-in safety guardrails and places restrictions when it comes to certain cybersecurity and biology-related queries. Now, Anthropic highlighted significant improvements when it comes to coding performance, analytical capabilities, and complex problem-solving as well. Access to the model will initially be limited to select organizations under its Project Glasswing initiative. The launch underscores the intense pace of innovation and competition across the rapidly evolving AI industry. Let's talk to you about some national news now. Heavy monsoon rainfall across Telangana led to a tragic incident in Hyderabad, where 2 people, in fact, lost their lives due to electrocution in an area as well. And you do have authorities really saying that a low-tension streetlight cable was accidentally damaged during drain excavation work, later remained submerged in rainwater accumulated on the road. The victims reportedly stepped into the waterlogged stretch without realizing a live wire was lying beneath the surface. Despite rescue efforts, unfortunately, by local residents, you do have both the victims losing their lives. The rainfall also triggered severe traffic congestion across several parts of the city. Let's also move on and talk about the Kerala government that has announced free bus travel for women on ordinary KSRTC services under its flagship welfare initiative. The scheme is going to be rolled out from June 15th and will be available to all women without any age restrictions. The state government, in fact, is going to be reimbursing the Transport Corporation for the cost of the scheme, in addition to the existing financial support already provided to KSRTC. The government expects the initiative to really boost public transport usage and improve the corporation's revenue performance over the coming months. Let's move on and talk to you about what the IMD is saying about weather alerts across Kerala and Telangana as the southwest monsoon really remains active. An orange alert, in fact, has been issued for parts of Kerala with forecasts of thunderstorms, moderate rainfall and strong winds reaching speeds of up to 50 kilometers per hour. Now, several districts are expected to witness adverse weather conditions through the day. The IMD has also issued a yellow alert for isolated heavy rainfall when it comes to multiple districts of the state. Meanwhile, heavy rain warnings, in fact, remain in place when it comes to 4 districts in Telangana, raising concerns over localized flooding and travel disruptions. The Union Cabinet has adopted a resolution congratulating PM Modi after he became India's longest continuously serving elected Prime Minister. The milestone was achieved after completing 4,399 consecutive days in office, surpassing the record previously held by India's first Prime Minister Jawaharlal Nehru. During the cabinet meeting, in fact, in New Delhi, ministers gave PM Modi a standing ovation and hailed his record-breaking tenure. The resolution recognized the achievement as a significant milestone in India's political history. Let's get you some international news now. The United States has launched airstrikes on Iranian targets after an army helicopter, in fact, crashed near the Strait of Hormuz, an incident that President Trump blamed on Tehran. According to US Central Command, you do have fighter jets that targeted air defense systems, ground control stations, and surveillance radar sites in what Washington described as proportional response coming in to recent attacks on US forces and commercial shipping. Iran, in fact, confirmed strikes near Bandar Abbas and Qashm Island and vowed really to respond. The latest escalation has also raised concerns over regional stability, ceasefire efforts, and potential disruptions to global energy supplies. And the US House of Representatives has approved a major funding bill for immigration enforcement, ending a prolonged political deadlock over resources for border security agencies. The legislation, when you talk about it in greater detail, in fact, it's providing funding for US immigration and customs enforcement and the border patrol through the remainder of President Trump's administration. The measure was passed largely along party lines and now heads to the White House for the president's signature. The vote highlights the continued political divide over immigration policy and border management in the United States. Let's also move on and talk about the world that has recorded its second hottest May since modern records began, according to the European Union's Copernicus Climate Change Service. Global temperatures remain well above pre-industrial averages, reflecting the combined impact of climate change and the emerging El Niño weather pattern. Western Europe endured one of its most intense early season heat waves on record, while parts of the Pacific Ocean, in fact, registered exceptionally warm temperatures. Last month also saw deadly floods in China and Turkey. Scientists are warning that El Niño is expected to strengthen in the coming months, increasing the risk of extreme weather, disrupted rainfall patterns, and higher global temperatures worldwide. Let's also move on and talk about Northern Ireland, that witnessed a second night of violent unrest after a Sudanese man was charged in connection with a knife attack that left a man in his 40s with serious neck and head injuries. Masked groups targeted homes, set vehicles ablaze, and clashed with police across Belfast and some of these other locations as well. Authorities are saying that several families were forced, in fact, to flee their homes amid the violence, which has been widely condemned as anti-immigrant in nature. Political leaders have appealed for calm and urged communities not to allow tensions surrounding the criminal case to really escalate into further disorder and attacks. Let's also move on and talk about a rare public protest in Afghanistan's western city of Herat turned violent after Taliban police, in fact, used live fire to disperse demonstrators protesting the detention of women accused of violating strict Islamic dress codes as well. Witnesses and protesters, in fact, said that both men and women joined the rally following reports of arrests targeting women deemed to be improperly really wearing the hijab. Medics reported fatalities and several injuries, although Taliban authorities denied any deaths. Officials acknowledged responding to the protests, saying security forces acted to maintain public order. The incident has renewed attention on restrictions imposed on women under Taliban rule. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the
market loses steam in last hour of trade as benchmarks give up most gains while broader indices turn negative. Nifty holds above 23,000 mark while Nifty IT falls for the 6th consecutive day. Rupee ends near yesterday's closing after whipsawing in trade, and the currency closes at 95 rupees 27 paise against the dollar after hitting on the intraday high of 95 rupees 8 paise against the dollar. Equity mutual fund inflows saw a sharp slowdown in May, falling from the previous month's levels. SIP contributions also eased marginally, while gold ETFs witnessed outflows as investor preferences shifted during the month. Fertilizer stocks surged after reports that the government may double this year's fertilizer subsidy outlay. The move comes as the West Asia conflict drives up the global nutrient costs, raising expectations of stronger policy support for the fertilizer sector. Banks raise FCNRB deposit rates after RBI's support. HDFC Bank sets FCNRB deposit rates at 6%, while Yes Bank keeps it at 7.1%. RBI support drives returns higher, attracting fresh foreign currency inflows, strong interest. Oil prices remain volatile amidst the renewed tensions as Iran downs US military aircraft and US retaliates to that. But Brent crude hovering around $91 a barrel. Prime Minister Narendra Modi surpasses Nehru's record as the longest continuously serving elected Prime Minister of India. Cabinet passes a resolution applauding Prime Minister for becoming the longest serving Prime Minister for consecutive terms. Hello and welcome to Profit 360. I'm Nisha Podar, and over the next half an hour, I'll tell you all about the important developments of the day so far. And as usual, we'll begin with the market update. It was a quiet day on Dalal Street, especially in the way it really ended. When the benchmarks really ended flat today, Nifty held above 23,200 despite the late selling pressure. While the Sensex, that posted just marginal gains, broader markets, they lagged throughout. Now, sectorally speaking, well, FMCG emerged as the top performer while real estate led the losses today. Let's take it across to my colleague Parth, who's joining in with the entire market action for the day today. Parth, tell us.
Nifty has closed flat today with Nestle India and Kotak Mahindra Bank being the top gainers, gaining over 2%, while Hindalco Industries and Coal India were the top losers, losing over 3.5% today. The broader market underperformed the benchmark, with Nifty Midcap 150 closing in red, down by over 1.2%. This was led by Oil India and NLC India as well. Oil India saw a downtick of 10%, while NLC India was down by almost 6% today. Nifty Small Cap 250 also closed in red today, down by over 1%. This was led by Gujarat State Petronet and IFCI, both of which saw a downtick of 7% today. Moving on to the sectoral side, we saw all the sectors ended on a red note except Nifty FMCG and Nifty Financial Services. The top gaining sector today was Nifty FMCG, up by almost 1%, led by Nestle India and HUL, gaining over 2% today. On the other side, Nifty Real Estate was the top losing sector, down by almost 2%, led by Anantraj and Lodha Developers, both of which were the top losers in Nifty Realty, down by over 3% today. Now moving on to the sectoral trends as well, Nifty IT has fallen for the 6th consecutive day, while Nifty Financial Services and Nifty FMCG managed to close in green for the second day in a row.
All right. Thanks, Parth, for the entire roundup. Let's also get a market expert view. We had Pratik Agarwal today, who says that the growth stories in India are really currently concentrated in the small caps rather than the large cap stocks. Listen in.
So let's not talk of it in terms of large, mid, small. If you speak to sales guys who speak to FPI, foreign brokers, etc., what they will tell you, first question they ask you is, what are your AI stories? Now, when they say this, it means what are your growth stories? While we may not have so much of AI, but we have lots and lots of growth stories. Just that they are not there in the indices. So FPI never came to India to buy value. It doesn't exist in this country.
All right, so that was all about the equity markets, and money market also equally important with the rupee movement. Well, rupee closes at 95 rupees 25 paise against the US dollar today. Now, the domestic currency, remember, paired the gains, but trades remain cautious amid the global currency moves, and also remember the evolving risk sentiment. Overall, the rupee traded largely near the previous lows with limited directional cues today, but it was comparatively a good day, especially with a lot of measures being announced by the Reserve Bank of India. Well, talking about the central bank after RBI's measures and the leeway on FCNRB deposits for the NRIs, remember, well, banks have started hiking the interest rates for the same, with HDFC Bank, Yes Bank already increasing the rate. And Piyush, my colleague, is right here with more details on what this development entails and what's the impact. Piyush, tell us.
That is right. Banks have actually started hiking the interest rate on 3 and 5-year tenure FCNRB deposits. We have seen banks such as HDFC Bank, AU Small Finance Bank, Central Bank of India, and Yes Bank and CSB Bank hiking their FCNR deposit rate. These are the first lenders to take the lead in hiking the FCNR deposit rate. Now, depending on each bank, the hike that has been done is around 175 to 325 bips, which is on the higher end of the expectation that economists had. And if we see HDFC Bank and Central Bank have raised their FCNR deposit rate to up to 6%, whereas Yes Bank and AU Small Finance Bank and CSB are offering an interest rate of as high as 7.1% on 3 and 5 year tenor FCNR bonds. Now, why are banks going aggressive? First, lower borrowing cost, as the RBI is managing all the hedging costs for these fresh FCNR deposits. And second, the more deposits the banks get, the more credit they can provide to the financial system. And apart from that, we have seen the RBI has also given some dispensation on these deposits with regard to SLR and CRR. So banks are finding this a very attractive sort of offering for their investors, and are offering rates as high as 6 to 7% on the fresh FCNR deposits.
All right, thanks Piyush for all those details. Now, following RBI's recent measures to really boost the foreign currency inflows, well, Punjab National Bank has announced the revised FCNRB deposit rates. Let's listen into their chairman and MD Ashok Chandra on the rationale.
Today morning only, in fact, first you are the first channel where I am going to announce. Today morning we had that ALCO committee meeting. And we have finalized the rate for 3 years, 4 years and 5 years. Up to 1 million FCNR deposit rate will be 6%. 3 to 4 year period will be 6.05, and 4 to 5 years it will be 6.10.
All right, so that's coming in from the banking space. Let's hop across to the equity mutual funds and the equity mutual fund inflows that saw a sharp slowdown in the month of May. This is data that is really revealed by AMFI, and falling 40% on a month-on-month basis to 22,900 crore rupees, according to the AMFI data. Now, investor sentiment was weighed down by, remember, the heightened market volatility as well as the global uncertainty that we have been seeing. Let's now go over to my colleague Alex, who breaks down these numbers and gives us the trend of the investor sentiment from the AMFI data. Alex.
Some key takeaways from the mutual fund data that was put out just a short while back for the month of May. The bad news first. The equity inflows, and this is active equity. This is where there is a fund manager making decisions about what stocks to buy. That category as a whole has seen net inflows fall very dramatically by as much as 40% to 22,908 crore rupees compared with the previous month, that is the month of April. Now, several categories within that have actually seen a drop, and most significant though is the flexi cap category, where the net inflows have halved. One good thing here is that the inflows into small cap and mid cap as a category have remained above the 4,000 crore mark on a net basis. What has happened here though is that fresh gross inflows have dried up quite significantly. Whereas they stood at 70,000 crore rupees in the month of April, they've fallen to about 57,000 crore rupees in the month of May, and the redemptions have actually gone up just a tad bit as well to about 37,000 crore rupees. Now, what is beyond that? You have gold ETFs and silver ETFs where inflows have dried up quite considerably. In fact, gold ETFs have seen an outflow of 725 crore rupees compared with an inflow of about 3,040 crore rupees in the previous month, and a high of 24,000 crore rupees in the month of January. There's also an important data point in the way of SIPs, and here's where this is the good news, and I'll end with that. SIP inflows have remained robust, and that is a good thing. They've stood at 30,954 crore rupees compared with 31,115 crore rupees in the previous month. So the regular investments have continued. Seemingly the lump sum investments have dried up just a tad bit, and that could be on account of what we saw in the markets in the month of April. They hit a bottom at the end of March, but across the board, they gained quite considerably in the month of April. Whether you had the benchmark Nifty 50 gaining about 7 to 8%, or the mid-cap index gaining about 13%, and the small-cap index gaining a further 17%. Now, because of that, it's possible that investors felt uncomfortable with deploying significant sums of money on top of that, as a result of which you saw the gross flows reduce quite considerably. That's how the numbers looked in the month of May.
All right, Alex, that was a very exhaustive and detailed summary of the AMFI data. Now let's take it across to another important development which means a lot for our economy as well, because sources tell NDTV Profit that the Fertilizer Ministry has sought 100% subsidy hike and the government is mulling the request. Shremi, my colleague, is joining in with all the details on the requirement and the government thinking. Shremi, tell us.
Well, India's fertilizer subsidy burden could rise to a record 3.4 lakh crore in the current financial year, nearly double the budgeted allocation of 1.7 lakh crore, as elevated global prices and supply disruption threaten to sharply increase the fertilizer import cost. Now, according to top sources, the Fertilizer Ministry has sought a 100% increase in the subsidy outlay, citing, of course, the sustained rise in the international fertilizer and feedstock prices. Importantly, the demand comes less than 3 months into the current financial year, reflecting a growing concern over the impact of geopolitical tension on the fertilizer import bill. But do remember the fact that India relies heavily on the import for key fertilizers such as urea, DAP and natural gas, etc., used as feedstock for domestic production. Any prolonged disruption, could push, of course, cost even higher. However, sources said that, the government is keen to shield farmers from rising input cost and is unlikely to allow a significant increase in the fertilizer prices during the ongoing sowing season. Now, as a result, a large part of increase is expected in the import cost and may have to be absorbed through the higher subsidy support. But the sharp rise in fertilizer subsidies could also add in fiscal pressure, and that's very important when Centre is targeting a fiscal deficit of 4.3% of GDP in the current financial year. However, officials maintain the stance that budgeted capital expenditure plans will remain intact, will continue despite the potential increase in the subsidy spending.
All right, Shrimi, thank you so much for all the details coming in on fertilizers. Now, India's fuel consumption dropped 6.5% in the month of May, hit by the high prices and also tight global supply amid the Iran tensions. According to Petroleum Planning and Analysis Cell data, petrol demand rose 3.3%, while diesel saw a modest 1.5% uptick. ATF sales, they remained flat as the airlines cut their flights and LPG consumption fell sharply by 20.5%, while naphtha demand dropped 29.5%, partly due to the diversion towards LPG production. So that's the update coming in on the overall fuel consumption in a very trying time for India. Now, India is also weighing more steps to protect its steel industry, and anti-dumping and safeguard investigations are underway. The government is evaluating additional protection measures for the sector, even as several trade remedial actions are already in force. Officials say that anti-dumping as well as safeguard duty probes can take up to a year. At the same time, officials say that the India-US trade pact could really open up significant market access, boost the exports and also create jobs. Listen in to what Amitabh Kumar, the additional secretary at DGTR, had to say on this.
We'll talk about the Indo-US bilateral trade agreement. So these are some of the highlights. What benefits will India get? That's why we are working towards it. And it all obviously will provide some new employment opportunities in some of our, employment intensive industry like textiles and leather, which also happens to be our strong point. And trade opportunities for young people in digital and advanced technology sectors will become easier and more accessible.
All right, so that was Amitabh Kumar outlining the government's thinking on trade protection and also market access. But what do these developments really mean for Indian exporters, the steel sector, as well as the ongoing engagement with the US on solar imports? That's also a very critical aspect in the entire negotiation. Rishabh, my colleague, who's been really tracking the developments closely, is getting us the key takeaways and also the government's agenda. Rishab.
Right. What we're picking up from the Director General of Trade Remedies is the fact that India is mulling more and more sort of measures in order to safeguard India's domestic steel sector. Now, there are several trade remedial measures that are already in place, but what we've picked up is the fact that some more measures are being investigated currently, and this does not rule out the fact that further anti-dumping duties or safeguard duties could actually come in, and this is to, of course, protect the domestic steel sector. The sort of representations that the government has been getting when it comes to the steel sector, those have also been flowing in, and the government is actively investigating them. The only point is that it might take 9 months or up to a year to decide on these investigations. These are very long drawn processes, so that's what we're picking up when it comes to the sort of steel duties that could be coming in. What we're also picking up is that the US probe on Indian solar cell imports, that is also something that India is actively working upon with the US. There is, of course, the 126% duties that Indian solar cell imports were facing, and that is now pending an administrative review. So that's something that will be coming up over the next few months or so. Remember, the same duties were also put on countries like Indonesia and Laos, and now India was also hit with these. And what we're seeing is that Indian exporters are likely to participate in those hearings as well. That is the second sort of point that emerged from the DGTR briefing. Another one was, of course, India's stance being reiterated on the fact that India does not have overcapacity or forced labours in the textile as well as other sectors. That's what India's stance has been, and India is ready to showcase evidence. This is, of course, in direct refutal of the Section 301 investigations that are happening against Indian companies and Indian entities as part of the US probe against 60 different countries. So that's what we're picking up when it comes to the Director General of Trade Remedies.
All right, Rishabh, thanks so much for getting us all those details. Now, tensions between the US and Iran have surged again after an Iranian attack on a US Apache helicopter near Oman. Now, the escalation has disrupted air travel across the Middle East. Iran's IRGC claims strikes on the US Fifth Fleet in Bahrain, a base in Jordan, and attacks impacting Kuwait. Now, Iran called it retaliatory attacks. Meanwhile, the CENTCOM says that it carried out self-defense strikes after Iran downed the US helicopter over the Strait of Hormuz. Oil prices remain volatile amid renewed tensions, with Brent crude hovering around $90 a barrel. All right, so that was the update on war and how it has been impacting the crude oil prices. Now, despite Mumbai's dry spell, remember, the IMD, or Indian Meteorological Department, says that the conditions remain favorable for the further advance of the southwest monsoon over the next 3 to 4 days. Now, the monsoon is expected to progress across more parts of Maharashtra, Karnataka, Telangana and even Andhra Pradesh, while covering the remaining parts of Tamil Nadu. And it is also likely to advance into parts of West Bengal, Odisha, Jharkhand, Bihar and Chhattisgarh, bringing much needed relief and rainfall to several regions as the seasonal weather system really gathers momentum. So looking out for the rains at the current moment here in Mumbai. All right, on the political front, remember, Prime Minister Narendra Modi has become India's longest-serving elected Prime Minister in India in continuous office, completing 1,399 consecutive days and surpassing the records of Jawaharlal Nehru and Indira Gandhi. Now, the achievement comes as Prime Minister Modi completes 12 years in office, continuing his third consecutive term. In fact, NDTV's Gauri Dwivedi breaks it down for us. Tell us, Gauri.
Today marks an important milestone as far as Prime Minister Modi and his government is concerned. Today, in fact, he's become the longest serving Prime Minister of India in a consecutive term, which is 4,399 consecutive days as Prime Minister. And he has surpassed the record of Pandit Jawaharlal Nehru, who served consecutively for 4,398 days. Now, it's an important milestone. The Union Cabinet, in fact, passed a resolution to this effect. There was a 7-point agenda that came out of the Union Cabinet, essentially congratulating the Prime Minister in terms of his public service record. Broadly and more importantly, there were also, in fact, messages and congratulatory messages coming in from heads of state, including Italian Prime Minister Giorgia Meloni, whom, of course, Prime Minister Modi had only recently met at his 5-nation tour last month itself. So essentially, you have global leaders congratulating Prime Minister Modi. You have the Union Cabinet, of course, passing a 7-point resolution. And the Prime Minister himself also pointed out that the public service record essentially reiterates his commitment with regard to ensuring that the public delivery system of India continues to serve the poor. Importantly, in the last 12 years, the government has said that it has lifted crores of people out of abject poverty. The PM had put out a number yesterday. It was 81 crore people. And remember, there are abject poverty numbers, then there are relative numbers. All of that put together, the government's entire focus has been towards poverty alleviation and also ensuring that welfare schemes, which is a very key and an iconic part as far as this government is concerned, that remains the central focus of the government going forward as well. Welfare schemes to ensure that all those who really need the government's backbone in terms of public delivery mechanisms, and that model, it's best served for people who need it the most. So essentially an important milestone of a day for the Prime Minister, for his government, and also a day where he has reiterated his commitment with regard to welfare schemes being one of his primary focus amongst many others for his vision going forward.
All right, Gauri Dwivedi, a very good account and summation of what a landmark moment this is for Prime Minister Modi and for the Parliament, Constitution and the country. With that, it's a wrap on this edition of Profit 360. Thank you so much for tuning in and keep it with NDTV Profit.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where I get you interesting mid caps and small caps, and at times even large caps also, and try to give you the story behind the sector and the company as well. But before that, try to guess the company which we are getting today in KYC. First one, hint is, it's a dairy company founded in the year 1992. Second hint, it's backed by ace investor Sunil Singhania's Abacus fund. Pretty interesting, right? Let's talk about the third hint. The stock is up just 48% in the last 5 years. So definitely they have, tested the investor patience. The company plans to grow their ice cream segment revenue by 5 times by 2030. Pretty interesting to understand this company. And the company in focus, I'm sure you know there are 3 to 4 listed dairy companies, but the company in focus is going to be Heritage Foods. Yes, this is the company which we are going to talk about in KYC. But why are we getting this company? You know, earnings season is over. What's so special about this company that has taken my interest? The first is the company's strategy ahead, especially with the focus on the ice cream segment. That is where everybody's talking about it. Recently, a lot of companies are moving from oil to milk. So it'll be pretty much interesting how premiumization plays out in the ice cream segment. The margins, will there be under pressure in what was seen in FY26, or will there be any change in FY27? How the milk procurement prices and volumes looking like, and most importantly, any impact of El Nino in the milk industry. Also, I'll be asking the company about the share of the value-added products versus the milk segment, and I'll give you the breakup also of these revenues, the growth expansion strategies ahead for the next 2 to 3 years for Heritage Foods, and of course another important question to be asked will be the reception of the newly launched product, especially in the paneer and the organic milk segment, how things have panned out, and any other further ancillary acquisitions which the company is planning, maybe a D2C acquisition or not. To understand the entire process, we'll have Shrideep Kesavan, the CEO at Heritage Foods, where Shrideep will answer most of our queries. But let's try to understand and get in more about this dairy company. You know, it's of course located in the south region, but let's get into the details about it, the history about the company. So it's a dairy company. It was co-founded in the year 1992. It's backed by Sunil Singhania promoted Abacus. That's around 1.4% stake is being held by them right now. Operations, they span of course 16 states of serving millions of customers. And also, what are the products? Dairy, value-added dairy products, which we talk about it, be it curd, be it your shakes, everything is covered in that. This is the overall capacity, you know, the processing capacity as well as the chilling capacity. While on the other hand, there are totally 18 plants and closer to 7,500 distributors and 225,000 retail outlets as well. But how does the revenue show up? What's the revenue breakup like? Milk is still higher, 56%, and every dairy company has a story that they are moving towards higher contribution from VAP. VAP is your value-added products, which is high margin. Demand is also pretty much decent, especially in both rural and urban areas, and that is why the street might start giving value to the stock or the sector if this contribution goes up. So this is the revenue breakup for Heritage Foods. Also, let's talk about the industry growth potential. Interesting data. Ice cream has an organized market share of 40%. Compare that with paneer is just 4%. But let's look at the CAGR growth for the next 7 years. 18 to 20% is for ice cream. For dahi curd, it's 21 to 23%. Look at paneer, 23 to 25%. And if you decode the ghee segment, it's on the lower side, roughly 9 to 12%. But remember, there is a good potential and India is a consumption story play. What are the key numbers for the Q4? Of course, the numbers were quite, you could say, mixed. Procurement prices, that increased by 8% on a year-on-year basis. And if you look at the average selling price, there was a slight increase from 55.6 last year to 57.8 per liter. Apart from this, the value-added product, look at that. That is where the growth is coming in. That is up almost 18% on a YOY basis. And there are some consumption packs also if you talk about it. Ghee, butter and VAP, which is the value-added products, that's also seeing a revenue uptick of almost 22.5% on a year-on-year basis. But what may work for the company? That's the question you'll ask me. Of course, the valuations are attractive. There was once a euphoria 2 years ago. 4 out of 5 analysts have a buy rating. So coverage is less, but nevertheless, it's quite bullish. The milk output is likely to remain strong in the year FY27. And this is despite the El Nino impact. Ice cream business, they are quite bullish on. From the current revenue, they're expecting it to go up to 5x, almost 500 crores by FY30. And this is where we are focusing. But what may not work for the company? Let me get you that reason. FY26 has been impacted by severe milk shortages. The pressure was coming on the margins, procurement inflation, and a weak flush season. So, of course, the FY27, will it improve or not? That's a big question. Sector is out of street's favor. Though it's not in that flavor also anymore. The working capital numbers may get stretched. That is where a little bit of concern comes for me, which I was just checking the numbers. So definitely concern is there in the sector as well as the industry. But another important place for concern is our KYC ratings. And KYC ratings, we try to understand with these 8 parameters on how we get our final rating on the company. Of course, this includes income statement, balance sheet, cash flow. This is of course there, but we also get in the ROC numbers to see, is there a pressure coming in the company? Apart from this, we also have the street cred, which is nothing but how much the money has actually been made by the stock for a long-term investor, short-term investor, and also we get in shareholding, valuations, we compare that with the other dairy players, and of course the outlook, both company specific and the industry. We get you all of these details compressed in the 8 ratings. So let's start with the first rating, and that is the income statement. And income statement, largely the 3-year CAGR numbers. Top line is not that impressive, it's just 12%. But if you look at how the EBITDA is panning out, or even how the PAT is panning out, that's where we see almost 20% plus CAGR gains coming in. But my concern is in the fourth quarter numbers and also the FY26 numbers. There was an impact, and that is where we are seeing it, and it's an aberration. So both EBITDA and PAT, that is where the hit has come in on a year-on-year basis. And largely we see the margins have been in between that 4 to 8% range, but there is a correction from 8% coming down to 6% So there is compression of margins. The management also stated, I gave you the reasons for it also. So it is giving a very mixed signals right now. So I'm going to give this a neutral rating. Let's talk about balance sheet. Balance sheet is largely for a company's this size. They have maintained it decently. But the borrowing, of course, this of ex-lease liabilities, the number comes in at 324 crore rupees. When it comes to the bank numbers also, it's kind of decent. But yes, in case there are some payment issues, then receivables might be in question. But it's nothing there right now on the balance sheet as of now. It's quite decent. A little bit of increase is there in the debt equity ratio. It's almost 0.3 times, but no major concern. So it's a neutral rating as well when it comes to the balance sheet. So we spoke about income statement, balance sheet. Largely neutral ratings I have given. Let's see what's happening in cash flow. And of course, look at the cash flow numbers. They were pretty strong in FY24, but that cash flow from operations seems to have come off in FY25 and 26. Largely the conversion has been pretty strong, and the net cash flows also, a little bit of adjustments are definitely there. But net, nothing much major to learn from this cash flow, to be honest. So I'm going to give this a neutral rating as well. Now a little bit of concern comes in for the return ratios. Largely it has been very volatile. You saw in FY22 the company enjoyed almost a 20% ROC numbers, and after that it has been kind of downhill, and it's tried to come up, and it's back at that 24 in FY25. But then again the margin pressures which came in the business, that also impacted the ROC numbers, and it's at 14% right now. So a very volatile kind of a setup for a dairy company when it comes to the ROC. And remember, expansion is at play. आइसक्रीम का बिजनेस भी धंधा बढ़ा रहे हैं और 2-3 नए लॉन्चेस भी कर रहे हैं कंपनी. So it's a neutral rating right now when it comes to the ROCE. Let's talk about shareholding. What has happened, what hasn't. Promoter stake hasn't been touched over the last 2 years. But look at the variations for FIs. March 24 it was 2%, it went up to 6%. Again it's back to 2%. So FIs haven't moved out, but a lot of volatility has come in. DI is also a little bit of concern is there. It was as high as 11% in March 24, but after that it fell to 4%, and now a little bit of DI buying is happening. Can you call it smart money entering again to the stock? We need to see and wait it out. So net, it's giving us mixed signals for the shareholding pattern. So I'm going to give this a neutral rating. Let's also talk about street cred, what has happened, and I think that's where the concern lies. I had given you the hint. The company has just made 48% in the last 5 years, and that is not good. If you're a long-term investor, the stock has tested your patience, and from 2025 highs, the stock is down 40%, and if you look at the last 1 year, stock is down 32%. A minor increase coming in from March lows this year, but a lot of stocks went up. So net, yes, the stock hasn't made money for much of the investors, and I'm going to give this a thumbs down as well in my analysis. But the question is, if there is so much stock fall, does this make the valuations quite attractive? Well, the entire sector has seen a churn. and that is why most of the stocks which were trading at 40-50 times almost 2 years ago all have corrected and they are stabilizing right now. Does it mean it's quite cheap? Well, it's evenly priced, I would say. I wouldn't make it very cheap also because the sector has seen a derating, and remember there is a cyclicality in a dairy sector. 20 times, 23 times, 26 times, most of the stocks are in that range except Hatsun Agro, that is where it's trading at 57 times, the forward P numbers. So I'm going to give this a neutral rating when it comes to the valuations on the peer analysis. But let's try to understand the outlook segment. What's more important? Let's get in. The first important point is the expansion happening across fresh ice cream and modern trade channels. Of course, quick commerce is also coming in and they can have high margin value added products which are coming on the shelves. So that is an expansion strategy. The value added portfolio, that's one of the most important things to track when it comes to a dairy company. Now recently they launched Heritage Creamy Shakes. It's something like an Amul Cool, just to simplify it for you. These are your milkshakes and also the frozen Malai Paneer cubes. Remember, these products have a higher shelf life also. India's milk output is expected to rise 7% in FY27 despite weak monsoon risk. So this is a positive point as well. So for this outlook, I'm going to give this a thumbs up. But let's try to revise the numbers for Heritage Foods right now in those 8 parameters which we have tracked at KYC. Largely it has been quite neutral: income statement, balance sheet, cash flow and return ratios, because there is some positive, there is some negative. Same thing happens here, but street cred, the stock hasn't made money for the investors. That's my concern. But on the other hand, the outlook, both industry and company specific, does show that the company is at a point of inflection. So let's see what's the total story all about. And the KYC rating is 4 out of 8 for Heritage Foods. It's largely quite neutral from our analysis, but which side will the story go? Positive side or the negative side? So to get that, we'll have Shrideep N. Kesavan. He's the CEO of Heritage Foods. He joined this company as a CEO over the last, you could say, 5 years, and more than 2 decades of experience he has in business leadership. One interesting snippet about him is the ex-VP of Coca-Cola India and South and education from Excelrai Jamshedpur. So now we are joined in by Shrideep N. Kesavan. He is the CEO at Heritage Foods. Good afternoon, Shrideep. It's always a pleasure to have you with us. And it's a summer season and everybody's talking about ice creams. And I'm sure you have also given a very strong bullish guidance on the ice cream segment. A lot of news flows are happening across this segment. As a company, how do you see this ice cream segment going? Of course, you have a plant also now. So just let's get some details in. And of course, almost a 5x jump in revenues we are expecting by 2030. So your view on that, Shrideep.
Thanks, Sharad, for having me on the show. It's always a pleasure. Yeah, the summer we are a vertically integrated dairy company, which means that we procure milk from the farms to selling the product. So whenever we have very harsh summer, it's excellent news as far as the consumer side is concerned. But at the same time, I'm a little bit concerned about the milk procurement as well. Now, coming specifically to the question that you asked, ice creams, at this point in time, it's doing fantastic. We commissioned our greenfield ice cream facility sometime earlier this year. From the month of March of 2026, it's been operational. In fact, we are scaling pretty well. It's actually working exactly on budgets, on our plans. And the viewers might also remember that earlier this year, we had acquired controlling stakes in a new age ice cream company called Peanut Butter and Jelly. These are makers of the very famous brand Getaway, whose entire business comes from quick commerce. And that's also doing exceedingly well for us in the last couple of months of this particular quarter. Ice creams is been the focus area for us because it's also an area where we have made capex investment in recent times, also the acquisition, and the weather has been exceedingly good.
Yes, weather, and for customers, the ice cream has been very good. It's a summer, it's on, everybody's enjoying that. But you're in the business also of ice cream, and there is something called the milk procurement prices and the volumes. On the raw material side or the supply side, how are the pricing actually looking? Are they firming up? And it's pretty much interesting to understand, even your butter prices. I was just checking, a very interesting take you have put in your presentation. It looks very nice. and you've given more details. So kudos to your, ideas on that. But I want to understand this pricing, the raw material pricing. Is it still on the higher side, or is there an impact of El Nino which you are factoring in also?
Yeah, see, the raw milk prices started going up from Q1 of last financial year. In fact, if I look at Q1 of FY26, the raw milk prices were up about 4.5% compared to same quarter in FY25. That 4.5% went up to 6.5% in Q2, and eventually we closed the year with 8.3% higher raw milk prices in Q4 compared to Q4 of same period last year, right? So that has been the kind of steep climb that we had seen through the last financial year. In a way, the raw milk prices, the price increases were due to two factors. One, on the production side, we had seen a mild decline while the volume seems to have grown across the nation, but grown at a rate of about 3.5%. Whereas the ask or the demand in the market would have been about 5%. So that gap in supply demand is probably one thing that affected. And the second thing is actually the input raw material cost increases for farmers. If you recall, actually, I was watching your presentation before I was brought in for this interview, where you analyze the numbers from FY24, FY23 onwards. And if you've seen FY24 and FY25, were reasonably good run for the company, right, because we had very stable milk prices at that time. So, you can call it law of averages or evening out.
Right.
The raw milk price had to happen because the farm sector was also under pressure because the input raw material prices were going up for the farmer. So in terms of farmer profitability, this had to happen.
Okay. So this is, of course, right, Shrideep. So this is basically an industry specific thing. It's not company specific, and it's we understand that what's happening. But I want to understand the margin outlook. Will that pressure continue in FY27 also? Because FY26 we saw a little bit of pressure was there in the margins. I'm talking about the overall consolidated margins. So will that pressure continue in FY27, or any signs of bottoming out right now?
Right. So going back to what I was saying, in the Q4 of last financial year, we had seen procurement prices increase of about 8.3%. And as a company, we had been able to pass on about 5% of that to the consumers, not purely through price increases alone, but also through expansion of value-added products. Price increase per se would be around 4% or 4.1%. The balance 1.5% expansion in our net revenue would have happened because we expanded our value-added product contribution by about 3%. Last year, we closed at about 40%. So the reason why I'm giving all these details is for the viewers or investors to unpackage what's happening. They need to understand these dynamics, and different companies might be operating at different level. And I can explain you how this works out for us. That 8% increase in raw milk prices is not going to come off in a jiffy. And this is something that everybody should understand. It will come down naturally because with volume expansion that is expected to happen, and we are already seeing early signs of that, this will come off, but probably it will take about 4 or 5 months or 6 months for it to happen. We are expecting probably towards the end of this calendar year, the raw milk prices should stabilize, at least 1 or 2% should come down from the current levels. But that's not going to happen in a jiffy. But that said, we should expect going forward increasingly resilient behavior from our company because of our because of operating leverage kicking in, because of productivity improvements, because of value-added product shares increasing over a period in time.
Right. And Shrideep, apart from this, let's talk about the growth and expansion. You already have a proper nationwide network, but are you looking at any geographies for more expansion here?
Not immediately. Within our geography, we are spreading our value-added products in a more effective fashion. For example, we have always been present in Maharashtra as a state with the acquisition of Getaway, as well as our own ice cream plant coming in. We are looking at expanding our ice cream portfolio into Maharashtra. So if you call that as a geographic expansion, that is there. But if you're looking at any totally new markets being entered in this particular financial, no.
Enough. And there were two new products which I was just checking that had been recently announced. Paneer with a longer shelf life and organic milk also, even though they are quite niche right now, but there's a big huge market for it, especially in the urban regions. So I wanted to understand how is the reception happening right now, initial feedback, what's coming in.
Yeah, though your question is on frozen paneer cubes, I'll demystify that. Primary market for that is actually exports. Exports is a growing part of our portfolio. We do not export commodities. Our exports are primarily on B2C branded products, and we are slowly and steadily expanding our presence in Southeast Asia as well as Middle East Asia. So these are markets that are the primary targets for this particular product. Even though we think that there'll be a small minor opportunity in India as well. In India, because fresh paneer is available, we feel that the opportunity for frozen paneer would be limited. But that said, as a company, we have been innovating continuously in the last several years. And primarily, we have been able to achieve that because of our superior consumer advantage, consumer knowledge, and our R&D capability. And in paneer itself, last year we launched Nourish Plus High Protein Paneer, which has already become 15% of our overall paneer portfolio.
Exactly. Paneer means for a vegetarian, it's a protein source, and we all know protein, how important it has become. Shrideep, it's wonderful to talk with you. You have given us some important dynamics about your company and also the industry which you are operating in. It's a bit tough, but nevertheless, a brave face, and of course, some operational efficiencies also at play. Thank you very much, Shrideep, for your time, and best of luck for the future. So interesting take coming in for a dairy company and how it's actually moving to an export play with value-added products and ice cream segment, which they are going very bullish on. So for interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions.
Hi, thanks so much for joining in. One of the big talking points today has been the data released by the mutual fund industry for the month of May. And as is usually the case, there's a lot of data to look through, but a few takeaways have stood out to me. And the first of these is actually the alarming bit. So let me get the bad news out of the way first. The inflows into active equity mutual fund schemes have actually fallen very dramatically, as much as 40% on a month-on-month basis. They came in at 22,908 crore rupees compared with 38,440 crore rupees in the previous month. Now, it's important to note, and I'll get into the nitty-gritties of that, but before we do, a few other takeaways for you. Other ETFs have actually seen an outflow of 620 crore rupees compared with an inflow of over 10,700 crore rupees in the previous month. Index funds have seen an inflow of just about 940 crore rupees. That's pretty low. Now, beyond this, the flexi cap category, which is the diversified equity category, has been getting inflows of over 10,000 crore or very close to that mark on an ongoing basis in the recent past, and that has fallen to about 5,000 crore or thereabouts. It's halved. You've still seen inflows of over 4,000 crore each into mid cap as well as small cap, which is actually a little heartening. You see those numbers on your screen. Now, what is actually also important to note is that gold and silver inflows have dried up almost completely. In fact, gold ETFs have seen an outflow of 725 crore rupees, and that compares with an inflow of 3,000 crore rupees. And remember, in January of 2026, you had inflows into gold ETFs of over 24,000 crore rupees. And finally, and this is the heartening bit, I saved the best news for last, and that is the SIP book continues to remain robust despite the kind of drop that you've seen in active equity inflows. It stood at 30,954 crore rupees in the month of May, compared with 31,115 crore rupees in the month of April. To talk about this and to talk about investor behavior as they see it, I'm joined today by Ashish Somaya, the Chief Executive Officer of White Oak Capital EMC, as well as Kalpen Parekh, who will join us in just a bit, Managing Director and Chief Executive Officer of DSP Mutual Fund. Ashish, I'll come to you on your initial reading on this active equity component, because as much as you take heart from several of the data points that I've talked about, particularly that SIP number looking robust, you must address the issue that there has been a substantial drop in active equity.
Yes, definitely, Alex. So, one can clearly see, like you said, 38,000 crore kind of net flow in equity funds has declined to about 22 or 23,000 crore kind of net flow. And clearly that is, maybe in response to the fact that now we are over 2 years where people are seeing, more like a flatlining of the market. In fact, from an all-time high, market is 10% lower. And, while it is par for course when one is investing in equity, but all said and done, there is a reason why, behavior is as important as understanding of maths and finance. So people are obviously more excited to invest when the past return looks good. And when there is a prolonged period like a couple of years, when the past return starts to get dragged down, is when people feel a little bit disheartened or demotivated. Apart from, when we are talking May over April, yes, we can see that there is a decline. But if I take slightly longer time frames, the decline is still there. But if I, since you mentioned a lot about different categories of funds, if I actually go back and look at a slightly longish comparison over the last year or two, what is worth noticing is that the biggest decline, actually almost the entire decline, is attributable to sector funds and thematic funds. See, at different points in time, sector funds, small cap funds, mid cap funds, flexi cap, the allocation or inflow outflow in each of these categories, it varies. That's fine. Even hybrid is, by the way, steady and stable. The biggest change, 2024 versus 2026, the biggest change I can see is actually is in sector funds and thematic funds. A couple of years back, almost 18,000 crore of net flow used to come in sector and thematic funds. And in May, you must have noticed it's less than 700 crores.
Yeah, that's an important point that you raise. In fact, people use this as tactical allocations. Kalpen Parekh joining me as well. I introduced him earlier, but Kalpen, I do know that you don't look at these numbers on a month-on-month basis. You may not give too much attention to it, but I'm still curious about what you think about the ongoing SIP number. Because when I looked at the active equity flows for the month of May, I must confess that I had butterflies in my stomach because I wondered, had the SIP number cracked at all? And the fact that it has not is something that I personally take heart from. What do you make of that?
Alex,
SIP numbers are very lazy numbers. They take a lot of time to build, and they'll also take a lot of time to unwind because they are like fragmented across crores of investors. So it doesn't change in a hurry, but the lump sum numbers change very fast. So, this drop in the month of May versus April is primarily where some redemptions from the stock of assets have happened and larger ticket size redemptions have happened. And typically larger ticket sizes are more connected to what's happening day to day. They enter early or they get out early, could be, combination of both. But trust me, 28 years of being an investor and also being in the same industry. I track these data points just to know the pattern of how my business is doing versus competition. But as an investor, personally, and you might not call me again, I think this is noise. Monthly data for most investors who are your viewers, my father is a viewer, he would be probably watching me on TV. He has to take care of his money 10 years out. Or my son is an investor. He is right now working or studying, so he won't watch me. He has to invest for 30 years. What happened in, May 1998 when I started my career is irrelevant to the size of my portfolio today. And that is why I feel this is noisy data. Of course, this is important for experts or, fund managers or analysts to just try and get a sense of how is the trend moving. And what Ashish said is spot on. We started our career in the same company together. What he said today is what we have been saying since 1998-99, that returns create the behavior of whether investors want to invest or not invest. We are generally always pro-cyclical. We invest when returns are high and we start getting out when returns are low. Whereas the reality is one should invest the opposite. So, two things. Most investors first make a mistake of investing at highs. So we all, in 2024, so much of money came and chased equity markets and nobody spoke of conservative investing, multi-asset investing, hybrid investing. Few of us did. The industry made a lot of effort to, focus on SIPs and asset allocation strategies. And one should also look at those categories. So while you are showing all categories here, you should also look at multi-asset category. And that category has been growing over time, which is a good data point. And the second point is, generally when returns fall, flows will fall. There is no rocket science in this.
Yeah.
Universally, it is nothing about India. It is a human race problem.
Yeah.
And it is a problem that even experts come and opine positively on what is gone up. So you should look back at all interviews and everyone who gave views on silver and gold in January when we saw the market. Is something that investors should start realizing, that anybody who talks of an asset class when it gives abnormal returns, you should switch off from that and focus only on your goals and your cash flows. My cash flow is monthly. I have no choice.
Sure. I want to actually talk about that in some detail. So, Kalpin, allow me to come back. And you're completely wrong when you say that I may not call you again. This is the reason why I did call you. So I'm glad that you made the point that you did. But Ashish, I do want to, before we get into some of the longer term conversations, I do want to drill a little bit down into some of the numbers that you spoke about, right? What stands out to me, and this is something that I was wondering as well when I looked at the first flush of the numbers, and you pay more attention to the gross inflows and the redemption value, right? Rather than the net number. So what has that told you? Because I look at 57,000 crore rupees of gross inflows into active equity in the month gone by. And that's a little worrisome because it's far off the peak, but it's far off the average over the last 1 year as well. What does that tell you?
Yes, Alex. So, when we spoke about the net flow number falling from 38,000 to 22,000, needless to say, like you rightly pointed out, the gross flow number has fallen from some 70 all the way down to 57,000. 70,000 gross flow has become 57,000, and the redemption is a tad higher. Correct. So I think the key message out here is the point that, last whole year, maybe people were investing average 65,000-70,000 per month. But in the month of May, they have decided to invest 57,000, which means, which talks to the point which I mentioned, that when the past return looks less attractive, then, people are less motivated to put in money. So if you look at the net flow, 38 becoming 22,900, what you see on the screen, you might not get the real picture. The real picture is that it's not like people are redeeming a whole lot. The point is that people are making less allocation towards equity. And that is where also the point comes that, in the last couple of years, the big decline is in sector and thematic funds, and the parts of the market which have held relatively steady. If you look at diversified categories, even if you look at small cap, mid cap, large cap, multi cap, flexi cap, all the diversified categories, they've been relatively stable. All the hybrid categories, except for arbitrage, they also have been relatively stable. While there is a decline in May there also, but if I take a longish sweeping view like a couple of years, that also is stable. Again, I'm repeating, the big decline in numbers over the last couple of years is sector and thematic funds. And that's what happens, right? I mean, when 2024 market was booming, the narrative is very different. And now, in 2024, everybody wants to do sector fund, thematic fund. In 2025, everybody wants to do gold and silver. And today, everybody wants to invest abroad. So that is how things move, unfortunately.
Yeah, it is. In fact, which is why a lot of people say the contra indicators are something that you should watch out for, and moving against the crowd is not often the easiest thing to do. But speaking of that, and Kalpe, now I want your view, because on our very platform, there have been views that have been described in the very recent past about SIPs being the root cause of several problems. At least this is a view that has been it's been described, and this is a platform for all views. So I'm going to invite both of you gentlemen to talk about what you think about this as well. The view that has been suggested by Shankar Sharma is that the SIP is resulting in an avenue for foreign investors to exit at a very decent price. It is leading to, in his words, a hemorrhaging of your forex flows and significant outflows over a period of time. So he's actually called for a stoppage of SIPs. Kalpen, question to you, is the SIP such a unique proposition? Is there nothing in the world that describes the same kind of monthly inflow? Because ultimately dollar cost averaging existed in 1955. So how is this dramatically different?
You have the answer to your question, and anything of recent past should not be extrapolated in the future. I think Shankar's point broadly is, on one hand, there is merit that if there is a lot of buying from one constituent, there is selling from some other constituent. But let me again take it back to why are we discussing this? The question is, I am a retail investor, and I take myself as an investor who earns his salary every month. On the 20th of every month, I do my SIP, and I've been doing it for 28 years, and I'm a very happy investor. There are periods of 3-4 years where everything will disappoint because nothing goes up permanently, and particularly when we are retail investors, we don't keep jumping our portfolios frequently. For the last 3 years, I am proud to say that most of our flows, 65% of our flows, have not come into equity or gold funds, but they've come in hybrid funds or multi-asset funds. And our investors are very happy with that. So I think the learning for all of us is that, if risk in a certain category has risen in any point in time, we guide investors that, okay, if you are a long-term investor, allocate to this category or that category. That is all we need to do. And investors need to also, take care of their greed accordingly. Actually, the best time for SIPs starts when we feel that SIPs have stopped working. So who has said that every year SIP will make money? It is not a fixed deposit. It is not meant to deliver fixed deposit returns. We have data to show over 30 years, since 1996 till 2026, 74% of times a rolling 5-year SIP just in Nifty 50 would have earned more than 10% return. And most likely this will be tax-free, because this is for retail investors whose tax slabs are very low. 74% times it has earned more than 10. So enough percent times it would have earned 12, 14, 15, 18 also. So why should I complain if on a rolling 5, and if someone is coming for SIPs for 1 or 2 years, that's not the right category. SIPs in an equity fund should have minimum 10-year horizon. Now, if I extend this to 10 years, the number will improve. We've done this analysis for almost 25, 30 countries. In almost all countries where markets are volatile or any asset class which is volatile, SIPs work if you allow them to work by purchasing more units when the NAV is lower. SIPs obviously will also purchase units at higher NAV and peak NAV also. But left to ourselves, most investors end up only buying in the peak of the cycle. At least SIPs are averaging it out. So SIPs are not like the holy grail, but what option do you and I have if we are going to earn our inflows every month? If we earn every month in a market of high risk, do a SIP in a hybrid fund. In a market of low risk, do a SIP in a equity fund. It is as simple as that. We should not overcomplicate this. I think it's a brilliant product. It generally works 95% of times and for 95% of investors.
95% of time. So the point has been made in the past that getting average returns is not the easiest thing to do. But I would like to invite Ashish to weigh in on this whole debate on the SIP and whether this is the root cause of a lot of problems as things stand right now.
I think it's a little unfortunate that we are drawing that conclusion. I don't think it was programmed or predicted or it was managed or it was deliberately done that way. So I think after something happens, it probably is a misattribution, because I'll tell you an example. In 2008, when the global financial crisis happened, FI sold $15 billion. Nobody asked us whether you'll be able to absorb the supply or not, but they did sell $15 billion and we were down 55%. So are we saying that if we didn't, I mean, at that time we were not able to absorb the supply, but they still sold $15 billion. And that time, by the way, $15 billion was 1.5% of our market cap. Okay. So they sold 1.5% of our market cap without mutual fund being a big player. And we saw what happened. So now they have sold, let's say this year they have sold $25 billion. I don't think it is 1.5% of our market cap. It's a smaller percentage and the market didn't decline. And yes, it so happens that on the other hand, if somebody is selling, there is somebody buying. And I can tell you in 6 to 12 months, there will be a day when FIs will be buying and we will be selling. That's how the market works, because there is that many number of people. Second point is that I think that we should look at also the other perspective. 10 years back, I know for a fact, I have been also around, like Kalpen said. 10 years back, do you know, Alex, what was the biggest criticism? There were two big criticisms 10 years back. FIs own 22 or 23% of our market. And what we used to hear is that Indians will always remain poor. They don't own enough of India's growth. Indians are just customers and employees of these big banks and these big companies. And when these big companies have great results, the bubbly is flowing in Singapore and New York, right? And 10 years later, the criticism is that why are Indians owning so much of equity? So I mean, unfair criticism. And the second point, 10 years back, there was also a criticism that why will foreigners invest here? 10 billion selling and you're down 50%. There is no liquidity. There is no depth in this market. It is not fit for institutions to be investing here. There is no free float. There is no local market. So now the criticism has unfortunately become the reverse. I don't know whether it is criticism or compliment. Okay, so I think, it's a passing, macro headwinds. By the way, what we are witnessing now, rupee depreciation, FII selling, geopolitical crisis, high energy prices. In 25 years, we've seen it 5 times.
Sure.
From 1998 to 2001, in 2008, in 2013, 2018 to 2020, yet again in 2022, and here we are in 2026. Each of these crises today feels like a missed opportunity. Only today's crisis feels like a threat. So I think we've been through all of this. I just feel that it's a passing headwind as far as macros are concerned. Let's meet 6 months down the line, things will be very different.
No, I'll be speaking to you much more often, but Kalpen, I do want to get your opinion, because a few months back, correct me if I'm wrong, as a fund house, you changed the view to say this is now the time to buy domestic equity. And there's also a statement that you've made, or rather has been made in Netra, about the real effective exchange rate and the fact that this is at a value that would suggest don't bet against domestic assets right now. This is at a time when a lot of people are looking at equity markets around the world and saying, hey, what has India done over the last couple of years? To your point where you're saying that now is the best time to accumulate. Can you give us a sense of what your fund house is believing right now with regard to Indian equity, and what kind of timelines are appropriate for an Indian investor that is looking to make long-term results?
Yes, we opine very frequently through Netra every 5th of the month. And one disclaimer, the team, Sahil and team work with the best of intent to objectively, let data speak to form a view versus forming a view and then creating the data. And broadly, 2/3 of the time, our views go wrong. 1/3 of the time, they don't work, or we are either early or we are wrong. Even the last Nidra doesn't say that, jump in all in. It just says that start accumulating because we are coming closer to fair value. Every market has an intrinsic value or a fair value. And there are different, templates through which you assess that. There is some bit of art, there's some bit of maths in that. But broadly, what we feel is that some components of our market have given, zero returns almost for 5-6 years, have seen 20-30% correction from their peaks. And these are solid businesses, good businesses, having headwinds right now. So there is an opportunity to start accumulating that. Equally, there are some components in our market where growth rates are moderate, but valuations still remain high. For example, we have said small and mid-cap fund NAVs are almost at all-time high again. So while all of us are struggling that there is market correction, people are anxious, nervous. But when I look at the small cap and mid-cap funds, the fund managers have done a reasonable job to not be in stocks which have corrected 30-40% because their NAVs are closer to all-time highs. So there are pockets where there are opportunities, there are pockets where there are still risks. We still believe this is not a time to be very excited. This is not a time to be very scared. We have to be in the middle, and that is how it always should be. I, as an individual, and we as a fund house have never had a very clear binary points in the market. That we can give you only at extreme points. Like 2 years back, in February 2024, we highlighted that our margins are at all-time high and revenue growth has started to slow down and valuations are at almost 2 standard deviation. So this is a setup of risk. Now, we didn't know that this will mean tomorrow onwards markets will correct. It took 6-7 months for markets to keep rising and then start to slow down. So our view is we should be, moderate in our assessment. We should be invested in hybrid funds still more. And if our portfolio has to be built for very long term, then equity funds are, a better point to start today. We are at a much better point than 1 year back or 2 years back. If we were all bullish 2 years back, we should be more bullish today. We still will have headwinds. We may still have a period of 1 year of, moderate returns or returns that we are not happy about. But it's never possible to forecast in advance. Remember 1 year back in March, almost so many people said that, stop your SIPs. And since that day till today, the SIP investor has been a better investor because he averaged out all through the low. So I think personal finance is more personal and less finance. When markets are correcting, the risk is coming down, not going up. And when markets are rising sharply, the risk is rising, but we always think of it the opposite. So our house view is that, invest through SIP for a 5 to 10 year period. If you're doing equity investing, it has to be long term. It cannot be short term. If you do not understand volatility and cannot sleep well with volatility, you have an amazing range of hybrid funds across 45 mutual funds. You can pick and choose. You have a choice. Nobody is telling you that invest only. I think investors need to also start listening right advice and then building the portfolio.
Okay, gentlemen, on that note, I'd like to thank both of you for taking the time. Pleasure speaking with you as always, and look forward to speaking to you soon.
Thank you.
All right, well, let us know what you think. This platform is meant to have views that are as varied as you can imagine. And we've got one view yesterday, we've got a different set today. Let us know what you think. And in the meanwhile, stay tuned. Lots more coming up in just a bit. This is NDTV Profit.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
when you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300.
Welcome to the much-awaited NDTV Profit Town Hall, and today the speaker we have in our studios is none other than Shankar Sharma, ace investor, founder of G Quant, Fin X-Ray, but I would say also one of the most controversial market speakers, at least on social media.
No, I don't think so.
No? Shankar, everything you put out then has a series of people who are coming aboard to say that whatever you said was wrong.
Of course.
You think about that when you post, that
Of
how many
course.
people will I upset with this post?
Of course.
So it's a considered thing.
100%. Social media is supposed to be like that, right?
Yeah.
If you're middle of the line, then there is no traction.
Yeah.
And if you're too goody-goody, also there is no traction. If you're a little borderline bad boy, it's good.
So of all the things and of all the years that I've known you, I don't think anyone can accuse you of being goody-goody. That's
Not even
for
my
sure.
mother.
That's good to know. So here's what we're going to do in this show. Here's the format. We'll have a couple of questions with Shankar, and then of course our brilliant team, all our anchors, researchers, and the NDTV Profit newsroom is here. They're going to be asking questions as well. But you have an opportunity to write into us. All of the handles are on your screen, where we will pose your questions to the one and only Shankar Sharma. I'm going to start with, I think, one of the controversial or more controversial things that you put out recently, a thought that Indian equity markets will actually have to take the brunt, let markets crack for some of the pain that we're seeing in our ecosystem to ease. What were you trying to say? Just recap that for us.
So it's a pretty straightforward theory that, look, any country which is going through some kind of crisis, and let's accept it that we have some degree of crisis. It's not 1991, but it is pretty bad after 2013. In that you have two markets functioning, or let's say three markets functioning. One is the bond market, your local bond market. Second is your currency market. Third is your stock market. Bond market, the RBI can manage, because it can do the OMOs and keep the rates yields down, which is what has happened. I don't know how long that can continue, but it has happened. Then you have the currency market, which is a more global market, and a stock market, which is also a global market. So the market that you have controlled is the least globalized, because you can control it, and that's why you can control it. And on the other hand, currency is something you're trying to control using reserves in India, which, as I wrote in my article in Mint paper, was that these are not earned reserves, these are rented reserves. Barring the invisibles component, which is your remittances and your software exports remittances, other than that, it's all rented. Rented money you cannot use to defend your currency. It's like a promoter raises money and then he goes out and starts buying his own stock with that to prop up his stock. It's not possible. So the only thing that you can let go of is that the stock market, because the stock market here is giving the FIIs a very easy exit liquidity. And this I wrote a year and a half back, and now you can see exactly the effect of that play out, that you're hemorrhaging $500 million or so a day. These numbers are absolutely staggering. You cannot continue this path. So India is, for example, going to raise, I don't know, $30-40 billion through the FCNRB. That's what is talked about.
Yeah.
That's 2 months of outflows. FIIs still have $800 billion to go. So you're raising a liability to fund exits. Very different from 2013, when if you see the data, we actually had a net FII inflow for the FY14. There was no bleeding and all that. So the buffer that was, so the cash that was raised by India was a buffer. It wasn't to fund exits. This time you're raising cash to basically fund exits. It's ridiculous. So my view is that you have to stop the stock market from providing these easy exit liquidity to the FII. In doing so, of course, you'll have to raise rates on mutual funds and do whatever. I mean, I'm not the policy maker. Let the market fall. In my 35 years of this business, I know FIIs walk in when there is a big market crash, because everything then changes. So that AI trade will then, okay, AI is risky. India has fallen 30-40%. Let's go back in. That's the way you will solve this problem. Otherwise, raising liabilities to fund exits is absolutely not a winning game.
No, but how do you let the market crash? Then it comes down to the domestic Indian investor, who has stood up in the last 5 odd years.
I don't like this term stood up. What do you mean stood up? Market mein you're not going to get paid to be brave and all that, yeah?
But they've come
this
to
is
the
not
table.
This is not the army or the soldiers fighting on the front.
No, agreed. I'm not
Ki
saying...
ja rahe hain ye foreigners and we are, fighting them.
Okay, so let's remove the morality from it. Let's remove all of that. But the fact is that they've come here for a reason, right? People are investing for a reason. They saw their FD returns. They want to make more money in their lives. And they're coming here because they've got returns. They want to be there when this dip comes. That's why you have people putting money in SIPs. Why should they walk away right now?
I'm saying they don't have to walk away. They need to be slowed down. Now, either it slows down on its own. So you saw that SIP closures exceeded the new openings, I think in April. I don't know what the May data will show. If it happens organically, well and good. But probably it won't happen so easily. In the interim, you would have bled another 30, 40, $50 billion of hard currency. India cannot fight a two-front war. You can't fight currency. In fact, three-front, bond market, currency, and of course the stock market. If there is one lamb you have to sacrifice the equity markets. They always come back. Always. There is no history of civilized markets where markets crash and they don't come back. Saal, 2 saal ke baad mein everything comes back. So you also give the locals a chance to buy cheap. What's wrong with that?
Okay, and what would be the mechanism of sacrificing this lamb of equity markets?
Simple. Taxation is the best mechanism.
You think tax more? Entire market is saying tax less.
In the 90s, when India opened up to FIIs, FII taxation was zero. It was on paper something, but through Mauritius, they could take advantage of the DTA and come with zero taxes. Domestic investors were taxed 20%. So the differential was a 20% differential. I am saying we needed dollars then. We need dollars now. Just do it. I know it will not happen because all of you guys will start demonstrating in front of India Gate and all that with candle lights and all, which is what people do.
Market participants don't demonstrate anywhere. They demonstrate on
They
Twitter.
do it only, I mean, people do it for stray dogs, I think.
On Twitter. Yeah.
So I think that's the only way. You need to disincentivize this engine. It is a runaway train. And it is causing a macro problem. If there was no problem, I wouldn't be saying that. But I'm saying you have $550 or $600 billion of reserves. They are rented reserves. If they keep flying out the door at $500 million, $1 billion a day, you're not going to be left with a lot of it by the end of the year.
Okay, queries flying in and we'll get to them. But first we're going to go in-house and of course our entire team here. Hiral, we'll start with you.
Hi Shankar, this is Hiral here. Your point taken when you're talking about what needs to
be done. You have no option,
SIPs.
you have to take my point.
No, I want to counter this.
Okay.
You're saying at this point in time, SIPs need to slow down. I was just picking up a little bit of data where your fresh SIP registrations have hit a 3-year low. Your SIP stoppage ratio has risen as well because it's gone up to 101.1
exactly.
in April versus 52, 75, 94 between 24 to 26. Does this mean that this is the starting point and from here, slowly, steadily, staggered way, you will see FIs coming back? Because this is exactly what you're alluding to, that SIPs somewhere have to come to a standstill.
Look.
People are not putting fresh money. And two, the other point is you've called India a haunted Haveli right now. So what is it that FIs are seeing which domestic investors are not able to see? Or are they also starting to see that?
So that's the point. I was chatting with Tamanna before the program started that last 24 months in my personal investing journey on the global macro front has been the smoothest ride I've had in a very long time. The entire world has been having a party. Entire world. India, unfortunately, along with maybe Philippines and Indonesia, are the bottom 3 markets out of 40 markets that I invest in. Bottom 3. India has never been in that position to the best of my memory. It's been middling to the top end of the markets. First time, and this is therefore the problem, the haunted Haveli thing is because you're not part of a large group of emerging markets that are underperforming. You are just in a pack of one. That's where the problem is. If you were a larger pack, no problem. Now, question is why? The question is obviously AI is one angle, domestic growth is another angle, currency. All of that put together tells me that you have a problem, recognize it, but the solution is not going to be raising more FCNR or doing a Resurgent India bond kind of thing, because today's environment is not 2013, where rates were too low, the spreads were very wide. As a non-resident, I could get a lot of leverage and lock in 4%, and you were levered 5 times, 6 times, you're making 20%. Today, you will not make that. So what is the solution? The solution is either organically mutual fund inflows stop or come down, or you make them come down. Now, organically, it will drift down. I think it will. Might take over 12 months. By that time, you've lost $100 billion. As I said, still have $800 odd billion to go from FIIs. You don't have that much cash to just keep putting out and giving foreigners easy exits. There's a huge wealth transfer.
No, but okay, so as an FII, as an NRI, how attractive, or what is your assessment of all the moves that have taken place in the last week or so, what the Reserve Bank of India has done, the removing of taxes on investments into government securities? How do you assess those?
Okay, so let's take that one first. In my view, that is a good move, but the point is Indian bond yields are artificially low. It was 7% or so, 6.5%, 7% when the currency was 84, 85. It's still the same. When your currency falls, your bond yields have to go up to compensate. Here, that compensatory mechanism has not happened because the RBI is obviously keeping the yields low. Therefore, it's not attractive enough for 7% rupee yields for any FII when your bond yields in America 4.5 or 5, depending on what maturity you take. It's not a good enough reason for people to come into the bond markets. One very important thing, the total bond market investments in India from the time it started is only about $75 billion total. Oh. And that, out of that 1 year, I forget which year, was $28 billion. That's your total data of flows into debt markets. That was when we were not in a fragile one kind of situation. So put it in context here. I mean, the market is telling you 7% yield is not attractive for a dollar investor into a domestic debt markets. And from the FCNR part, I don't know what banks will offer. Maybe they'll offer 6% or so. But the funding cost is going to land at my doorstep as a non-resident at maybe 5.5%. The spread is 0.5%, maybe 1%. Is that good enough to bring in 50 billion? I would be very, very surprised if it does.
So viewers, if I told somebody 5 years ago that Indians would discuss protein intake as passionately as cricket scores, most people would have laughed. But today, wellness has become mainstream, nutrition is becoming personalized, and also food companies are increasingly becoming health companies. So to talk about this changing relationship that India has with food and health, I'm being joined by Prateek Gupta, CEO and co-founder of Pluck. And thank you so much for joining us in the studios, Prateek.
Thanks a lot. Thanks for having me here today.
Yeah. So Prateek, before diving straight into the business and the heavy duty stuff, I would just start by asking you and also settling a mystery here with the name Pluck. So for a layman, when they hear the term Pluck, it means plucking of fresh fruits and vegetables. But I would like to know that what's the mystery behind 2 Ks in your Pluck, and also what's the story behind this name? Who coined it?
Yeah, so it was us as a team, and of course, I was very much in that building of the Pluck name.
Yeah.
We started with the vision to create the largest or the most a game-changing fresh brand in India, because that's what a lacking white space we saw.
You've been building this business for about 5 years now. You started in 2021. So what's the single conversation that's changed over the past 5 years?
5 years back or 4 years back, we had just COVID, which has ended, and people were looking at hygiene. People were looking at strengthening their immunity. They were looking at freshness, that how they should eat more fresh to ensure that they are not eating too much processed food, too much preservatives. And then most lately in the last 1 or 2 years, we are seeing that people are focusing on nutrition, gut health, protein, sleep, skin, hair. A lot of these things are becoming like a problem solution eating behavior.
Yeah.
That's what we've really seen change, and these trends were very visible to us like globally.
Let's talk about business. Let's address the elephant in the room now.
Yeah.
So, you've made acquisitions like Cook, Upnourish, and Upnourish has apparently given you strong returns as well, like 5 times growth in just 18 months and also 10 times growth in the protein segment.
Absolutely.
So, so tell me about that. Did you see that coming? Did you anticipate that kind of a growth from Upnourish? And how was the journey been like?
Yeah, so I mean, again, we went into Cook and Upnourish both as the consumer feedbacks were. Pluck always stood for fresh, safe, clean. And just for example, you do a salad.
Yeah.
Customers also want a nutritional wise complete salad. It should also have the complete protein with it.
Yeah.
So that's how the idea of a nutrition based approach started. And we started building in-house, and then we found a good company to partner with. That's how it all started. And of course, we did not expect like the protein to go so big.
Yeah.
We knew that there are like these 10 trends out of the 100 trends, and these include protein, gut health, sleep, skin, mental health, and so many other things.
Yes.
Where we thought that okay, we must build products and value additions into our fresh catalog according to that. But protein has definitely taken over for the last 1 year.
So it came as a surprise to you as well?
Yeah, absolutely.
So Prateek, I would also like to know about your expansion plans. Currently, I would like to know in how many cities you are available, and also how are you planning to expand globally as well as domestically?
So when I think about expansion, I think in 3 main vectors. One is the product expansion, second is the geographical expansion, and third is the channel expansion.
Right.
So Pluck is already in about 50 cities through the quick commerce companies, and mainly our presence on online segment. So our products will be available through them on these cities. At the same time, we are looking at one on the geographical expansion side. We want to be present in close to 100 cities in the next 1 to 2 years, based on our expansion on the online platforms, more dark stores. Secondly, on to the modern trade and general trade stores. That's also a channel expansion. And the third one is expansion into a few more countries, which is on the mostly Western countries.
With this ongoing West Asia conflict, so how well cushioned is Pluck at the moment, and are there any sort of impact on Pluck as well?
So definitely there is some impact, because everything that we do is a lot of packaging dependent, whether it is juice bottles or caps or simple punnets in which the products are packed. So these things require some sort of an infrastructure where it is connected with the entire petroleum and oil energy thing.
Yeah.
So we have an impact, but almost every FMCG company has the same impact.
Okay.
So we are like not like differently poised over there. It's like at par, but there's some benefit as well, because as we look at export, the value of the difference in the value of the rupee and dollar is actually helping us to export at a better price.
Right.
So these are the things which we are probably impacted.
All right, and I would like to know, how did FY26 really shape up for Pluck, and when will Pluck really break even? And also the D2C and modern trade and also general trade is happening. So how is the channel looking like for Pluck?
So 26 was a great year for us, because this is the year where we really thought about diversifying from fruits and vegetables and a little bit value add to a significant value addition in our products.
Yeah.
Keeping the core same, but these value addition products that I mentioned, like cold pressed juices and plant protein bars and frozen berries, frozen grated coconut, even like we are now doing a very clean label ketchup.
Okay.
So I mean, these kind of products came in over this year, and we were able to scale this entire range for the consumers. We also moved closer to profitability in terms of the entire fresh business that we already have built. So largely it was a very good year from that point of view. Break even, I think that we are near.
Okay.
I think 8 to 12 months to be precise. But yeah, that's also an important focus for us.
Quite an optimistic tone there, with your company. And also, how is Pluck really planning to utilize its funds, and are you planning to raise funds in the near term?
Firstly, we have just raised funds, and we are planning to utilize those funds first onto primarily on the customer-oriented projects. Like one is the R&D to improve the quality of the product, improve the packaging, see to it that how it can get more nutrition to the table, etc. That is number one. The number two thing is use of technology and artificial intelligence in so many things that we do, starting from a quality check, computer vision based quality checks, demand forecasting, pricing, trend spotting, product creation, and these kind of things. And then of course it comes also because we want to take our brand, take the awareness of the brand higher. So brand awareness is one important area, but I would call it, we'll probably invest more into customer education to identify the right consumers and then educate them that, you know, why you should eat right and how Plug can help you do that.
Yeah.
Like Plug is all about switching into a healthier lifestyle.
Yeah.
So I mean, getting that message across is important.
That's very interesting. Also, Prateek, I would like to know 5-year plan, growth strategy for Plug. What's next? What's ahead?
So as I said, these are the three vectors that we are playing: channel, product, and geography. And definitely all these, you know, expansion into modern trade and general trade is a big area that is left untapped for us. That is one important area. We are going to continue enter white spaces where we see that a Plug brand can extend into. Just as I mentioned, ketchup is a very interesting product, large product category, very few clean label alternatives. So similarly, we'll try to enter such categories where people can see Plug as an alternative to their daily lifestyle. And of course, in the next 2 to 3 years, we are looking to 10x our revenues, because we are seeing a very organic and natural consumer traction into the stuff that we are doing.
And Prateek, I'm very curious with this AI age that we're living in. So how Plug is really planning to leverage AI to the best of its potential? Because I remember your platform is one of the kind platform that had a scanner in which you can actually track where your fresh produce is coming from.
Correct.
So in that way, you have incorporated tech, you know, at a very early and nascent stage of your, starting of your startup. So how are you really planning to leverage AI now into the system?
Yeah, so actually traceability is, we think that we are industry first innovation on that technology, where a product can be scanned by a customer to see where it's coming from, etc. But that was a couple of years back, and now we have built so many things on AI. Actually, internally we have a Plug.ai, which is like a system where employees can go in and, you know, for their particular function, they can do several things. So as I mentioned, computer vision check is, we do millions of products every month which pass through or don't pass through. All of this was a manual loop, which has now become like a computer vision AI-based system. Also, what to produce on what day, what to transfer into which city. All this is a demand forecasting, supply forecasting economics, which again is getting like, more and more into managed through an AI system. And very importantly, there are like, again, thousands and thousands of trends across the world. Like today, you'll see protein is a trend. Another trend is coming, some fruit is a trend, some benefit, like people are searching for something or the other. So amongst these thousands, which is the one where the consumer is really wanting to have a solution and we can pitch in? And so this is also a very AI sort of trend spotting, product trend spotting engine that we built, which helps us get the right product built in the least time and get it to the market fastest.
Prateek, with the heavy duty stuff done, now it's time for some fun segment. And it's time for a rapid fire. So if you allow me, one wellness trend that's according to you is overhyped.
I think keto diet.
And also, if Plug had a Bollywood personality, so what would it be? I have a few names in mind, but I will not give you. I would just want you to brainstorm.
Oh, that's a full, Plug brand marketing discussion. But, I'm like little old school, probably. I follow celebrities from my times, seen Milind Soman and Sean Abraham kind of people.
Right.
So I think that
associates with Plug.
But association with Plug has to be with the core audience as well. Somebody who is a homemaker who could actually help switch the lifestyle in that household.
And lastly, Prateek, what's more difficult? Convincing Indians to eat vegetables or convincing investors to actually invest in a startup that's around, vegetables and fruits and fresh produce?
I think that's a no-brainer. It's the convincing people to eat vegetables.
All right, Prateek. Yeah. It was a great conversation with you. Yeah. And thank you so much for taking out the time and being with us and sharing your deep insights regarding your brand, Pluck.
Lovely speaking with you. Thanks for having me again.
Thank you.
Thanks.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to The Big Question. I'm Vikram Oza. This evening we're looking at a shift that could really fundamentally redefine the future of work in India and across the world. Now, India's largest IT company, we're talking about TCS. TCS is saying the day is not far when it could have as many AI agents as human employees. So potentially 500,000 AI agents is what we're looking at, and they would be working alongside 500,000 people, humans. And at the same time, the company has made it clear that while layoffs are not planned just yet, the era of mass hiring in IT may be actually slowing down. That's what we got from N. Chandrasekaran. And this, of course, puts the cats among the pigeons again. This is not just an Indian story, of course. In the United States, more than 87,000 jobs have already been cut this year. And they, of course, are citing AI disruption. And this is according to challenger-grade data that we're looking at right now. Big tech companies, on the other hand, they are spending hundreds and billions of dollars. They're building their own AI future. But considering this picture, there is a paradox. Even as automation is replacing some of the jobs, companies are desperately searching for new age skills. Meta, for one, has now launched this $115 million Workforce Academy. This academy is to train workers for AI-era infrastructure jobs, and they range from fiber optics to welding to electrical systems. So the real battle now may no longer be humans versus AI. The battle may be skilled humans versus obsolete skills. So can India, which is a country that's built on labor-intensive growth and a massive young workforce, can we adapt quickly enough? Will AI create more jobs than it destroys? And our companies, colleges, workers, are we all prepared for the biggest reset of employment since the digital revolution? That's a big question we're asking tonight. So even as we watch TCS announcing 5 lakh AI agents getting deployed, what does it mean for the future of work? And what does it mean really when these new skills are going to come into play? Will they really protect jobs or not? It's an important question to ask. Let's begin. But before we go across to our panel that's joining us on this debate, let's first get an understanding, a quick chat with industry veteran C.P. Gurnani, the co-founder and vice chairman of IONOS. He's the former CEO and managing director of Tech Mahindra. Always good to see you, sir, and welcome to The Big Question, Mr. Gurnani. If you were speaking tonight directly to a 22-year-old engineering graduate who is really worried when she or he is hearing from the chairman of TCS, no less, that AI agents could equal human employees and this could happen in just 3 years, what would you tell this person? What would be your advice?
Great question, Vikram. And I'm sure that the 22-year-old is clearly concerned about his or her future. And this is clearly a top of the mind question. So my first point is very simple, is industry has been obsessed with kitne aadmi the, now it is becoming kitne aadmi the and kitne agentic AI the.
Right.
So take a step back. Agentic AI is now becoming part of our lives for the last 2 years. And you cannot have an army of aliens, you cannot have an army of AI agents unless a human applies to it. So my first point for a 22-year-old is, please look at who is going to harness the power of those agentic AI agents. And if it is a human, then you better follow the track of data, follow the track of governance, follow the track of traceability, and follow the track of applied AI. Number 2 is that, all these agents, when I use the word governance, they would need orchestrators, they would need AI auditors, and they will also require somebody to manage them. So to the 22-year-old, my request is, do not focus on quantity, but focus on capability. The 22-year-old, my advice is, start looking at becoming a workflow architect, not just a process compliance guy. A process compliance guy, whether you are in testing or quality, that job would be taken over by AI.
So then this big fear that has been around, Mr. Gurnani, around AI, the biggest fear is that it attacks repetitive white-collar work first, whether it's coding or testing or documentation or support. So then middle-class knowledge jobs, are they now more vulnerable than the factory jobs were during earlier industrial revolutions as well? Would you make that correlation?
So the way I react to it is in two ways. Number one is AI is now reaching into the boardrooms of not only the Fortune 500, but now it is reaching the owner's office of an SME or an MSME. That means it is opening up about 60 million new corporations which will require AI, number one. Number two is that we need to focus on output. If we focus on outcome, we will realize that we can serve the bigger market in a much bigger way. Every time a technology has been introduced, SAP was introduced 52 years ago, it opened up the ERP market. So my constant belief is that AI of today will open up more cybersecurity jobs, will open up more data scientist jobs, and will open up more orchestration and governance jobs. Then we would lose to what you are calling process-oriented jobs.
Meanwhile, Meta's new Workforce Academy, Mr. Gurnani, it's quite interesting because it's trying to combine AI with the skilled trades, the electricians, the fiber technicians, the construction workers. So could the future actually see a revival of vocational and technical skills over the purely software-driven careers?
Listen, as I said, capability building.
Yes.
For me, the capability building clearly means is we are talking about experiences. Yes, the industry will be shifting. Industry will expand. Now, whether that will mean only workforce training, my belief is that a healthcare worker with an aid of an AI is going to be more productive. That means I can serve a much bigger population by becoming more productive. Similarly, life sciences, we have seen it in our own backyard. Bharat Biotech was one of the first few which produced a COVID vaccine. We have just seen that Bharat Biotech is doing trials of TB vaccine and TB drugs. I mean, just think about it. India has been independent for almost 79 years now, and TB is still one of the biggest menaces. Think about it, Vivek Wadhwa and Vionix is now talking about cancer diagnostics in the next 2 years.
Yes.
And not that cancer diagnostic didn't exist, but he is talking about doing diagnostics in less than 100 rupees. I think that is the power of human, that's the power of AI. And I would like to believe that while we will be worrying about drones and robots, I think we will also be creating a lot more jobs.
What about our education system, sir? India's education system, is it anywhere close to being AI ready right now? Because at the moment, industry reports are showing that many employees are relying on self-learning instead of structured training.
I personally believe that most of the educational institute that I am engaged with, as you know, I'm a trustee on Plaksha. I am involved with Mahindra University. I am Nagpur. At every place, I think there is an urgency that did not exist 3 years ago, 4 years ago. So I think talent capital of the world will remain India, and the university system is responding beautifully to this. Self-learning, it's become so much easier. So I would be surprised if the self-learning is not high on the agenda of every individual.
Fascinating insights, Mr. Gurnani. We leave it there, but of course the future perhaps is going to belong to those who learn the fastest and who adapt the fastest and learn how to work alongside some very intelligent systems. Thank you so much, Mr. Gurnani, for joining us on The Big Question. Appreciate you making the time and setting the tone for our debate. All right, now let's get that debate going. Our panel joining us tonight to discuss whether or not we are going to remain the talent capital of the world, even when it comes to AI. Ganesh Natarajan is joining us, Chairman of GTT Data Solutions, also Honeywell Automation and 5F World, also the former Chairman of NASSCOM. That's Ganesh Natarajan. With him, Karthikeyan Natarajan, the Chief Executive Officer of Infinite Uptime. He's joining us from Washington. And we have Ramani Dhati as well, Chief Financial Officer at TeamLease. And rounding off the panel, Kiran Monish, AI expert at Dexian. Great to have you all. A very good evening. Mr. Natarajan, to you first. Ganesh Natarajan, when the chairman of TCS is saying that AI agents could soon equal human employees, you see this as a productivity revolution for India's IT sector? Will we continue being the talent capital, or you think this is the beginning of a more structural employment shock?
Well, I don't think so, Vikram, because if I frame your answer in two statements of Chandra himself, he did say that, look, the hiring will come down, which is very true. There's no way you're going to hire large masses of people from engineering colleges, etc. in future. It'll be a very judicious mix of, deploying AI agents, which you mentioned, and of course, hiring people and retraining people. That's one. The second, I would like to point you to an article written by Chandra, which I yesterday, in fact, called him and complimented him on, which is the 5 new opportunities in AI. That goes right from upgrading existing systems to reimagining the entire organization, all the way to physical AI, because AI embedded in dark warehouses or factories will be the future. So I'm an optimist. I really believe that if there is enough retraining that happens in the industry, if academic institutions, which CP was mentioning in the conversation you just had, are able to come up to speed and train people for the new revolution, I think we will retain our edge. Don't forget, we still have the largest talent of English-speaking manpower. And for them to reorient their thinking towards being AI-enabled and mastery of AI should not be that much of a problem.
Then in the process, are we fundamentally breaking that old business model, which was, of course, built on scale, large teams, campus hiring, repetitive services work? How will that change?
Of course we are, Vikram. There's no way you can be anachronistic and say that, look, we will stick on to a model that is no longer valid. Just to give you a case in point, one of our clients in the US, they work in the fraud area. When we first went in, they had 270 employees. Today, they have 27 employees and 400 AI agents. And the AI agents are structured in a hierarchy that you would expect earlier in organizational pyramids. So clearly, the business models are changing. And if we don't adapt, we'll be dinosaurs. So we'll be probably dedicated to Jurassic Park. So certainly, we have to change, and we have to assume that this change is inevitable.
So we don't want to be in the Jurassic Park. Ramani, your company sits at the heart of India's jobs market. You think companies already are slowing entry-level hiring because AI can now automate parts of coding and testing and support work? Is that something that's already underway? What are the shifts you're seeing already?
Vikram, in fact, that's been happening over the last 2 years. Like IT services, the overall hiring or even the existing base of headcount has been consistently coming down. And almost finally, after 8 or 9 quarters, we are now seeing an uptick in hiring because the basic skills or the traditional software skills like code writing, testing is where we have seen the biggest disruption of AI. But now almost every single company is looking for some kind of AI implementation, digital transformation. And now everyone is looking for AI specialists, data analysts, people who support these initiatives. But AI itself is 5-year-old. So where are we going to get all these people? So in fact, we are having a different kind of problem at our end. The kind of open positions, the kind of demand that we are getting from be it GCCs or IT services, or even for that matter, any company, irrespective of the industry, for talent that they are looking for AI skills or cybersecurity, cloud management, we are finding it extremely difficult to fulfill. Because every single day we are getting new open positions, but on the supply side, people are not ready, the upskilling is going slow, and companies have started upskilling their internal talent. But I don't see any immediate disruption on the existing job roles as far as IT is concerned, because last 2 years, the correction has already happened.
Kiran Monish, do you agree with that? Which are the jobs that are actually most vulnerable right now, and perhaps which kinds of skills are becoming that much more valuable?
Sure, Vikram. So, to answer in 2 parts, I'll say first, the critical thinking and problem solving kind of skills is anyway going to help across, any industries and domains. So, if we have expertise in all those areas like critical thinking, problem solving, and if you are also an SME in any particular domain, then these kind of skills or these kind of jobs are going to stay. But if we are doing some repetitive tasks like creating some boilerplate scripts or doing some reporting or static content generation, then these are the skills that would slowly wind away. But there is also one more thing that is happening. Like, it's not just the jobs are going away, but the jobs are getting redesigned, is what I'll say. Because we can see since we are using AI agents for a lot of repetitive tasks, humans will be focusing more on judgments, giving visions, as well as on the orchestration part. So I think, most of the jobs will not be replaced, but it will be redesigned in such a way that the humans will just focus on the vision, directions, and judgments, and the AI will do the repetitive task. So I think that's how it would go further.
What's your sense, Karthikeyan? You work closely with manufacturing and industrial systems, and usually we think of AI disrupting the white-collar jobs. But is there a bigger transformation that's happening on factory floors and industrial operations?
Oh, absolutely. Thanks, Vikram, for having me on this show. And there is definitely a disruption that is happening, and a lot of manufacturing workers would be assisted with AI-enabled solutions. So maybe there is an option here to generate new jobs, which is going to really enable manufacturing productivity at 10-15% per annum kind of levels. And also, to answer your other question that you brought out, the pace of productivity that is going to be seen on software engineering versus the new job creation, there is going to be a lag. And that's going to cause some disruption. That's going to cause some anxiety amongst the software engineering roles. And also what Mr. Jensen talked about in the conference last week. And he said there is going to be more codes that is going to be written by autonomous agents. But then you also need to integrate. You need to integrate the workflow. You need to make sure that the data flows are connected. And there is going to be a lot more orchestration, integration kind of jobs that is going to be created. And net of it, it is going to be a positive job creation for the decade. But there will be a huge disruption that is going to happen on the existing jobs by 30-40% in the next 3 to 5 years.
Since, India benefited so much from the outsourcing wave of the last 30 years, Ganesh Natarajan, you think AI is going to help India become the next export opportunity as well? Or you think automation is going to reduce the labor advantage that India has relied on?
I think it would be premature to say that we will be the next big thing in town, because clearly for the next maybe 6 to 8 quarters, you will see a transition, because there is no doubt that entry-level jobs are going to be very badly hit, and that's already beginning to happen. You see the large numbers of job applications that are coming through. I mean, every day I get at least 14, 15 requests to help somebody's nephew get a job, etc., etc. So there is a bit of a crisis. It'll resolve itself. That's, I think, Karthikeyan rightly said. I mean, everybody's talking about the new role of the human, and the new role of the human is what we have to adapt to. And I mean, I personally think there is a lot of initiative happening in the industry. For instance, we ourselves run 2 large social enterprises, one called Lighthouse Communities, one called Million Jugnus, which are working both with underserved youth in slums and with mid-tier colleges to really prepare students for careers of the future.
Correct.
And the new areas of digital, the new areas of AI are going to be very important. And at the top end, if you look at, for instance, I just finished a conversation with IIM Mumbai in Mumbai, and we're talking about designing a full program around Chandra's 5 activity model, which will actually train both executives and incoming freshers on how to deal with all these opportunities in these 5 areas. So I think there's a lot of thinking happening, but we have to prepare for ourselves, and it is not going to be an easy path. Let's not fool ourselves by saying that we will automatically become the leader in the next wave.
So then where does Meta's new Workforce Academy quite fit in? Because it's an interesting model, because it combines AI growth with vocational training. Karthikeyan, how do you see that really working out? Could that be a new model where companies are going to train the workforce of the future and create the opportunities that AI is going to create?
Oh, absolutely. I think there will be a lot more assist jobs on many vocational roles, be it as a factory worker for testing, validation in the physical world. I think a lot of them would be enabled with assist. And we talked about healthcare, radiologists who can probably be assisted with a lot more AI. And somebody was saying that the radiologist job would have extinct by this time 5 years ago, but they remained the same. They became a lot more productive. So the number of X-rays or MRI scans that they can do is a lot more than what they have done before. So there will be a lot more productivity that can be enhanced across the vocational roles. And that's going to be a great opportunity for the industry to work on. But having said that, I think this will definitely be disrupting some form of existing roles, definitions. The new roles are going to get created, whether it is ML Ops engineer or AI orchestrator or AI workflow integrator or data engineer and prompt engineer. So there will be new roles that will get created. The latest I heard is the forward deployment engineers, where some of the large companies like Google have announced about 5,000 plus open positions there.
Yes.
So you will find AI is not going to be just implemented in silos. You have seen Anthropic, OpenAI coming up and talking about setting up services SOM, and which is nothing but when you want to deploy AI in an enterprise world, you also need the huge amount of domain knowledge and plus your ability to implement at this context to a specific industry. So that's not going away.
Correct.
So you will find a lot more new jobs that will get created, but there will be a disruption in the near term.
So there will be disruption, but Ramani, for a young graduate watching tonight and feeling anxious about AI, what's the single most employable skill or even a mindset that they should build over the next 3 years, you would say?
Yeah, in fact, entry-level talent are more amenable and more open to adopt and learn AI skills. So, in fact, our set of clients are finding it more difficult, their mid-level employees, to upskill and adopt to the new AI platforms. So, but in terms of skills, as I said, if entry-level people can align and quickly upskill themselves towards more of AI, ML related ones, or be it cybersecurity, cloud management, project management, wherever the human discretion judgment, those things are relevant. Definitely those roles continue to get more and more demand. So we are not seeing any kind of challenge around these specific roles. But as I mentioned earlier, the traditional roles of coding, testing, and the repetitive works, checklist-oriented, very process standardized roles will definitely be up for disruption.
Kiran, what do you say? 10 years from now, do you think we're going to look back at AI as a job destroyer or as a tool that is ultimately making human workers that much more productive, that much more valuable?
Yes. So it will be the latter, Vikram. For us, AI augments our workforce. So if we look at that perspective and take AI and see how we can leverage it in our day-to-day work and see how we can use it to improvise our work, then we'll be able to have a lot more success stories.
Well, that is the hope. Tonight's discussion really capturing the scale of the transition that is underway. AI clearly going to automate parts of work, reduce the repetitive tasks, change the hiring patterns across industries. But equally, that debate is showing that this may not simply be a story of jobs just disappearing. It may be a story of jobs changing faster than workers in companies and education systems are currently prepared for. Now, the big challenge is not just building better AI, but building a workforce that can evolve with AI. My thanks to Ganesh Natarajan, Karthikeyan Natarajan, Ramani Dhati and Kiran Monish. Thank you for joining us with your insights tonight. And the takeaway for us is quite simple. In the AI economy, the safest job may no longer belong to the most qualified person, but someone who adapts the fastest. The adaptability part of AI, not to be left behind when it comes to the reskilling, that's really going to determine how quickly we can rise along with the growth of AI. I'm Vikram Oza on The Big Question. Thank you for joining us.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup
you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us. For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300 300.
Hello and welcome to NDTV Profit. I'm Vikram. Now, can a mainstream Bollywood film really make India's most important economic crisis and the people who actually prevented a sovereign default? Can a film make this part of popular culture? That's exactly what has happened with the film Governor, The Silent Savior. It's a film that's inspired by the life and work of former RBI Governor S. Venkata Ramanan and, of course, the extraordinary events that surround India's darkest economic hour. Joining us today on the channel, two people bringing that story to audiences across the country. Manoj Bajpayee, one of India's most versatile actors. And of course, we have the producer of the film, Vipul Shah, who's made some excellent cinema in the past. And here we are talking about a film that perhaps kind of digs into India's, like I said, that dark economic hour. To kind of choose a film which is of that period, that kind of history, that time when we are currently grappling with an oil crisis. How did you choose a film like that? What was in your mind when you were reading the script for the first time, Manojji?
Okay, creatively, because when it came to me, it was around 4 years back. People called me up, and both of us have been looking for an opportunity to work with each other, and because we've known each other, right, as a colleague in this fraternity. But one film that we tried to make it happen and didn't happen. Then 4 years back, he gave me a script. I went through it. First of all, I was surprised. And I can see the same kind of surprise and also some kind of apprehension on everybody's face when they come to know that we are making a first economical thriller with a backdrop of 1991 economic crisis and in the time of complete political instability. So yes, I was surprised and shocked in the manner the script was written. That the script was very much accessible to a person like me who always ran away from the economics classes and the mathematics classes. I found it very difficult to really pass those years somehow and kept on, feeling that once the board exams happen, I'll be completely free. And that is the case with every student and everyone, mostly. Mostly people, when you speak to them, most of them are either unaware or not interested. They find it quite tedious one. But the way the group of writers, including Vipul, they have managed to put a mainstream thriller in that backdrop, made so simple for everyone to understand and to put the context so directly and in a very simplified manner.
Right.
For everybody to understand, even from anybody who is walking on the road to anybody who is having a great lavish office like yours, everyone will understand it equally.
Right.
Yeah, they will understand the gravitas of the crisis, and they will understand the struggle of the protagonist and the journey of him emotionally. That was very a tedious task that these guys have accomplished. I think every time I talk about the film, the first and foremost, which comes to my mind, is the humongous task the group of writers have achieved of making it simple, engaging, and accessible to each and every one.
So it's not an easy task to be able to do that, Vipulji, and it's something that comes after years of doing work in that genre, if it were. If I can call it that, because there is a certain genre. You're talking about biopics, but here you're talking about someone who has been on the sidelines, the silent savior, like you call him. So what about him interested you, or was it much more that period that interested you to make a film on?
Actually, the whole point is that in Indian history, we've got some amazing unsung heroes. And generally, we don't talk about them. We talk about, people who are right in the front of the, focus. So we forget about those people who have quietly built something, quietly worked, and done something so heroic. So I think that was one of the most inspiring part about this film. And if you ask today's generation, they don't even know what 1990s India was. They don't know there was no Coke, no Pepsi, no Domino's, no McDonald's, no multiplex, no shopping mall, nothing. And they find it very difficult. And in 35 years, what started then has transformed India into a very powerful country today. So I think that journey was fascinating. For us, it was a story of financial independence. One independence we got in 47. In 1990, we got 1991, we got financial independence, and we are now enjoying the fruits of it. So the challenge as a writer and as a director for Chinmay Mandlekar, who is not here right now with us, for all of us was that how do we make people interested? And how do we make them feel that this is a story that they must watch? I can tell you one thing, we've done few shows now, and lots of people have watched it, and I can tell you that females are loving the film more than the males.
Why is that?
More than the males.
It's surprising. I mean, they come out and they say, oh, you made us cry, you made us laugh, and we can't imagine in a subject like this, you've been able to put humor, you've been able to put so many human emotions, and it is so relatable. So I don't understand finance, but I understood the film. I understood the crisis. I understood your heroism that you are trying to portray.
Right.
And they all are going gaga over his performance, obviously.
As we do very often.
I mean, yeah, we've always done that. So they come out and they say, oh my God, what performance, this, that, the other. But what connects to them is the way the narrative has been, woven in a very simple story.
Right.
And that is what they are taking home. So many people may think, this is a story which might just appeal to males. But I can assure you that your wife is going to like it as much, if not more.
So then, Manojji, you vet your stories very closely. From the choice of stories from a Bhikhu Matre to playing an RBI governor who goes down in the annals of time. Matlab, history to such a great deal, but also leadership qualities of a certain period in our economic history. To be able to choose a character of that kind, what did you have to understand of the period that India was going through that made you say that, look, this character deserves a mention? Because like I said, he's not known. Many people from the younger generation who will be watching this film will not understand that period that India went through.
Right. There are two, three things to it. Why I do it? Because, in our industry, it's very important for us to understand your strength very early in your career, and start chasing that and start building it. If I'm a real person, I should do that immediately and start working on it. The 30-year bias, I realized that my strength is not going to be my face. My strength is not going to be my dance. My strength is not going to be how I fight. My strength is only going to be the thing that I have learned during my theatre days, and I have to build my career on it. Yes, it will take time because the going is not favorable for an actor like me. So, brick by brick, you have to build it. You have to have patience and hard work, which is needed, mostly all the time.
But I want to interject. Why are you saying that the going is getting increasingly tough for an actor like you?
Yeah, because in the time of in the time when the commercial films, wherever we used to go to the studios, people will tell you, because we belong to the same time, every studio that we used to go asking for work, looking for work, there was some hero or the other singing a song. There is some song shooting happening, some dance sequence happening. So that was the going on of that time. The commercial films were ruling the roost.
Correct.
Okay, and there was hardly any space for anything else at that point of time. Okay, and satellite was something that I was keeping a distance from, because in those days, people who were working, the actors, not considered as the possible talent on the big screen.
Right.
So for that, in the initial days, till the time I could survive in Mumbai, I stayed away from television. But I eventually had to do it because you have to do it. But the first thing you're looking for is to survive in the city.
But it's interesting that the transition into OTT and the amount of work that you're doing over there.
See,
but that was an eeasier choice, right?
Yes.
Between film and television to television, now of course that much more OTT. Was that an easier transition?
So people also vouch with me on this, that on OTT was rising. It just came in. It's still in its baby phase, and I happened to be in the US, and I watched Narcos and Breaking Bad.
Wow!
And that was not available to us.
Right.
So I watched it for the first time at my friend's place where I was staying, and then I started talking about the series with my friends, and they said that all of these actors are big stars here. They are ruling Hollywood. So in our country, in our industry, everything comes from there.
Right.
The tradition, whenever it is changing, shifting to something else, somehow it starts reflecting on our industry a little bit late. But I realized that OTT is entering Indian space. I think it will be interesting to try my hands with this.
Right.
And luckily I got Family Man. I realized when I heard the story, I realized that this is it. Because we have a very different audience sitting at home. Very, very different audience.
True.
Their way of consumption, the stuff on television, it's something that satellite has changed it completely. So Family Man was the right choice, where you are talking about a family person and how he's trying to find the balance between his job and the family, and
right.
it is something that everybody can relate to, whether you are a producer or a news anchor. Everybody can relate to that struggle. Correct. All of us have been doing that. Our fathers have done it. We've been doing it. Yeah.
So that relatability is very important, Vipul.
It's very. So this is I was coming to that factor. Why women are liking it? I think if the head of the family is going through a dilemma, a conflict, the family comes together. And this is what is touching the family. The family scenes between me and my wife Madhu, she's a very known actress, and the daughter. So they are connecting the dots quite emotionally.
Right.
It is touching them there. So I think that is where the film has been successful.
So when you talk about relatability, there have been films in the past, like a Scam 1992, about exploiting the financial system. Here you're making a hero of the system, hero of the person who drove it, who happened to be on the fringes, was not right there in the center, not with Mr. Narasimha Rao and Dr. Manmohan Singh, who get celebrated for that entire crisis management that took place. And the very important juncture of moving the gold, that is the big dramatic point. To bring that story alive, to choose that, to make a celebration of that and putting the spotlight on it, was that a tough decision to make from the kind of cinema that you've made in the past?
Not really. Actually, when I heard the one line of the idea, I was very sure that I wanted to make the film. Because very seldom you get a film which is so rooted and yet it talks about unparalleled heroism. And it's such a positive film. It's a patriotic film, but it's a patriotism that doesn't come from the borders. It's a patriotism that comes from within the system. The system we generally hate so much. We say every government organization is bad and corrupt and this, that. And here is a group of people led by these exemplary gentlemen who fought a crisis and got India out of a situation which is unimaginable. So such a huge task, and they just did it without a noise. So I thought that was the best, greatest part about the script, that you are talking about something so monumental, but done without absolute, with absolute zero noise. And to me, that was the biggest heroism. And the character that Manoj plays,
yes,
even if you see the trailer, he is not shouting or screaming, but when he says that I will not let India fail, you know that this guy is going to do something massive.
He means business.
He means every word of it from the core of his soul. And the way he has performed it, it's amazing to see.
Right.
So I think these are the reasons why this film had to be made.
Right.
And again, you're talking about a financial world which is supposed to be a boring sector, so to say, but everybody is involved in financial sector.
Yes.
So it's the responsibility on us was to make it entertaining, interesting, and truthful. I think we've been able to do something.
But Manoj, you're known for your nuanced playing of characters of various kinds. Often they're on the fringes of the power play, whether it's like a lawyer or a policeman or, you know, here you're right in the center of how this entire decision-making was happening at a very crucial moment in our economic history. So to be able to understand that character, the leadership that he portrayed, an RBI governor. Today, the RBI governors are much more celebrated, but we don't know enough about the one that you're talking about. In fact, that's why the spotlight is on him. What did you understand about this gentleman who you're portraying? I mean, what was it about him?
People just mentioned that, you know, so there's some people who are working very quietly behind the doors. And they don't care about the spotlight. They mean business. They are very serious about the job, and they understand the burden of the country that they are carrying, and the hopes of so many millions and billions of people they are carrying on their shoulder. So these people are not made of the material which is looking for some kind of validation. They are actually all the time struggling and working to find some solution, some way forward for the country. You know, their every decision, every policy where their signature is going is measured 1,000 times by these brilliant minds who's working on it day and night. So that itself, you know, shapes your personality. It's not only knowledge, just the understanding of the position that they are holding, the weight of the position that they are holding, the responsibility, you know. So when you are working on the character, when you start getting all of these elements, your focus is to get it just right. That silence, that pause, that stable gravitas about the person that you are performing, that it should not look like your pretension from any angle. It should look like natural, free for flowing mind which is occupied only with data and calculation and statistics. So yeah, I mean, it takes time.
But if a certain situation of this nature that was so critical for us, because here you're talking about such a hideous balance of payment situation that you have to move your gold to a Bank of England to be able to mortgage it and to be able to kind of play that risk. If that kind of situation, God forbid, had to happen today, how do you think that would play out in a film? How would you choose to kind of portray that? Would it be very different, this kind of situation that you're speaking about historically? And if you had to kind of see that happen in a current context where we're still grappling with oil prices, we're still talking about the impact of higher oil prices in the future, which of course led to that situation as well because of the Gulf War, right? So something like that, if it were to happen today, would that be as easy to turn into a film, perhaps years later?
See, the most important thing is that this man, as I understand him, is one of the most patriotic men who served our nation. Unless and until you are so patriotic, when you come in the office and first day, if your team tells you that the country is going to go bankrupt in 1 month and you don't quit, quitting was one option. He never took it, and he fought and fought and fought with the team, and he led them from the front, and he got India out of that. So to me, that patriotism is massive. And I think that today India is such a powerful country that I don't think we are going to come into a situation like that. But we both have been very carefully again and again, and even my director Chinmay, we have tried to tell audience through the film that history can repeat itself. If you don't learn from history, you're going to make a very big mistake.
Right.
And history is there for you to learn. All the kids, all the students, all the people who are young, they are going to be future leaders. They must watch this film to understand the kind of crisis India was in and how we came out of it. Tomorrow there can be a different kind of crisis. The war is still not over and nobody knows where it's headed and what can happen. There can be a different challenge. So today's leaders can take some kind of a message from that crisis, and that was the effort. That if this film is viewed by today's audience, it will make them a bit richer after watching the film. They will come out a little more mature. They will come out with a little more sense of patriotism towards our country.
Also, knowing things in context always helps you.
Right.
Right. And here is a big context to refer to and to learn from, as people were saying.
So when you want people to think about this film, perhaps years later, looking back at it, Manojji, and your performance in it as well, for everything that you bring into it, how would you think people are going to reflect on a film of this kind?
If that happens, I'll be very happy. All of us will be happy because this character is part of the script. I'm really hoping that through my performance, they will understand the job very well. First of all, you are also educating the people about the seriousness of the job and what is their contribution to the growth of the country. So even that, as reaches straight, will be very happy.
Well, certainly that's a hope. It's a fascinating story because it reminds us that history is often shaped not only by elected leaders and the ones who grab the headlines, the headline makers, but also by the institutions, the technocrats, the individuals who are working quietly behind the scenes when a nation actually is facing its most difficult moments. And whether viewers come away thinking about economics, leadership, public service, simply the importance of difficult decisions that are taken under immense pressure, well, this story, Governor, the silent savior, this film certainly revisits one of the most consequential chapters in modern India's journey. I want to thank Manoj Bajpayee and Vipul Shah for joining us and walking us through what we can expect from the film. We wish you great success with it.
Thank you.
And Mr. Bajpayee, of course, we are looking forward to all those nuanced characters that really stay etched in our memories.
Please watch this film, Governor, which is releasing on 12th June. In theaters, I'm always, repeating it, in theaters nearby you, and go with your family. I am very, very sure with Bipul and my team, we have a great confidence in the film. The story that we wanted to put it out there, we can assure you about a very truthful story and truthful work from our side.
Looking forward to it, sir, and all the best.
Thank you so much.
Thank you.
Yeah.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected.
Good evening. Welcome to The Bottom Line. I'm Vikram Oza. Typically, the headlines tell you what has happened, but this show takes it beyond the headlines and we focus on why it matters. Here are the news stories that we are tracking on the show this evening. Oil prices remain volatile amidst renewed tensions as Trump says Iran will pay the price. The Iranian president, meanwhile, refusing to budge, though he does say that they must move beyond the state of neither war nor peace. Markets lose steam in the last hour of trade today. The benchmarks giving up most of their gains, while the broader indices have turned negative eventually. The Nifty holding above 23,000, while the Nifty IT index has fallen for the sixth day on the trot. In the currency markets, the rupee has ended near yesterday's close after whipsawing in trade. The currency closing at 95.27 against the US dollar after hitting that intraday high of 95.08. Equity mutual fund inflows see a sharp slowdown in the month of May, falling from the previous month's levels. SIP contributions have also eased marginally, while gold ETFs have seen outflows as investor preferences have shifted during the month. Banks have raised the FCNRB deposit rates after RBI support. HDFC Bank setting FCNRB deposit rates at 6%, while Yes Bank has kept it at 7.1%. The RBI support driving returns higher and attracting fresh foreign currency inflows. The government has approved 96 companies under round 3 of the textile PLI scheme, a 12,822 crore rupee investment, and this to boost manufacturing and employment. Starlink is refuting any delays amidst reports that its India debut has hit a roadblock. They're calling it misleading, and Starlink's vice president saying that the company is working with the government to bring Starlink services very soon to India. Prime Minister Modi meets union ministers and NDA chief ministers at the Bharat Mandapam. He is going to address the NDA ministers' conclave shortly. Our focus on the top line tonight on reports that Starlink's India debut has been delayed. Starlink, on its part, is saying that its India plans remain firmly on track. So the Elon Musk-led satellite internet company Starlink has pushed back against those reports that the government has frozen approvals for its commercial rollout in India. And Starlink is saying that it remains in active discussions with authorities, continuing to receive positive feedback on its ability to expand connectivity, particularly in the remote and underserved regions of India. And the company has already received a letter of intent from the government, is awaiting now the final regulatory approvals that is required to launch their services. Recent reports had suggested that the government had frozen the approvals for commercial operations over concerns about the use of Starlink terminals in Iran. But the company maintains that its engagement with Indian authorities remains constructive. But for India, satellite broadband is seen as an important tool. It's a tool to bridge connectivity gaps and expand internet access, and it should go beyond areas that are served by the traditional telecom networks, essentially rural areas. But the bottom line is that the launch is in progress, even as these talks are underway. But how long it's going to take to materialize? When would Indians get access to Starlink? That remains the important question. Let's discuss this about Starlink's role in India. And for that, Neil Shah is joining me. He is co-founder and vice president for research at Counterpoint Research. Good to have you with us, Neil. Neil, what's your understanding? They're saying, on Starlink's part, they're saying that there is no freeze, that talks with the government are moving on. Where exactly do you see the hurdles before their launch?
I think, thanks for having me on the show first. And I think the hurdles are definitely when a foreign entity, which is a privately owned, is going to take a bigger piece of pie. Especially in one of the largest, most populous country on the world, it's going to be contentious, especially when you see the role of Starlink in previous wars, like in the Ukraine war, or now the rumors, ramblings about the Iran war, right? So that definitely raises a lot of questions around sovereignty protection in India, right? And that is going to be the key thing, as we are surrounded by multiple borders, threats as well. And that is going to be a big topic of discussion. And there is obviously no smoke without fire. And I think Elon Musk will have to comply, have to basically make sure from compliance point of view, governance point of view, the data sovereignty and the sovereignty from like terrestrial to space remains.
So about the use of Starlink terminals in conflict zones like Iran, what exactly is the concern and how seriously do governments globally, not just India, but globally, how do they look at these issues when they're evaluating satellite internet operators like Starlink?
Yeah. So traditionally, satellite is seen as a borderless internet across the world. But now with all these geopolitical tensions and data becoming the new oil, it's becoming very important for geo-locking the satellites on particular area like China. Starlink does not have access to China, and it's not operated, it's banned, especially from China. And similarly, for the conflict zones, Starlink has been geo-locked, software locked. And if there are some rogue terminals which are being imported and it's accessing Starlink in an area where it does not have license to operate, that puts the overall sovereignty of the country at risk. Right. As if someone can access satellites over India, outside of India, that's going to be a risky move.
Already, Elon Musk has met Prime Minister Modi, and this happened earlier this year. And we've also seen these partnerships being discussed with Indian telecom players. So strategically, tell us how important is India for Starlink's global expansion plans? Since we're talking about delays, what about the partnerships? Where do they stand?
Yeah, I think there are two things here. One is SpaceX is going for an IPO, yes. Right? It's targeting $1.75 trillion IPO. And losing access to almost 35% of the world's population or landmass in terms of China and India, I think that puts a roadblock in its IPO, right? The timing is very precarious and not aligned with what Elon Musk must be thinking. That is one. Second, even if it is approved, right, there will be some leverage shifting from Starlink towards its partners like Jio and Airtel, which are going to be essentially a retail channel for the Starlink products, right? And there will be always a hanging sword or questions around the sovereignty of data, and if there is going to be a kill switch, which is controlled by one of our private companies rather than the government having the full control over it. So that always will remain doubtful, especially for some verticals which are hard to reach or enterprises which are looking to LEO-based satellite connectivity to power their remote locations. So they will have a choice whether to go with an Indian local player or with Starlink.
So Neil, what would success look like for Starlink in India over the next 2 to 3 years if they do manage to come in? Are we talking about subscriber scale? Are we talking about enterprise adoption? Is there going to be strategic presence? Where do you see the success coming in, considering the competitive landscape that you yourself highlighted? Very quickly, if I may ask you.
Yeah, I think it's mostly, it will be around enterprises is a low-hanging opportunity, like airlines, for example, right, to have connectivity within the flights and remote locations for retail stores or warehouses and so forth. I think that is a high ARPU market. Consumers, I don't think it's completely ready because the terminals are expensive. At the same time, the ARPU will be very high compared to the lowest ARPU what we enjoy with terrestrial ports.
So where it stands, Starlink's India entry may not be instantaneous, but it certainly does not look abandoned either. The direction is clear. The negotiations are active, as we understand. And now it's all about how quickly policy, security, commercial interests as well, all of these align. Thanks very much, Neil, for joining us and breaking this down for us tonight. Always a pleasure getting in your perspective. Meanwhile, the latest on the escalating US-Iran tensions. Donald Trump has issued this sharp warning, and he says that Iran has taken too long to negotiate what he is calling a great deal. And now, according to Trump, Iran is going to have to pay the price. Those are his words. On the other side, Iran's president, Masoud Pezeshkian, is striking that defiant tone. He says Iran does not want war, but will not tolerate any violation of its sovereignty. So So that message is clear that Iran is not going to back down if it is pushed. So this comes after a serious military flare-up in an Iranian strike that reportedly targeted a US Apache helicopter near Oman that further intensified tensions in the region, and now the fallout is visible. Air travel across the Middle East has been disrupted, airlines rerouting, cancelling flights even. Iran's Revolutionary Guard is claiming that it has carried out retaliatory strikes that target the US Fifth Fleet in Bahrain. So these are bases in Jordan as well that they are targeting, also impacting Kuwait. Meanwhile, the US Central Command is saying that it has responded with self-defense strikes after the helicopter was brought down over the Strait of Hormuz. And global markets are reacting. They're reacting sharply. Oil prices remain volatile. Brent crude hovering around $92 per barrel mark. And this is as the geopolitical risks are spiking yet again. So we'll keep monitoring all those markets right now. Now, bringing it back home, this is about the RBI's latest measures to encourage foreign currency inflows. Now, banks have started raising those interest rates on FCNRB deposits that are offered to NRIs. So lenders like HDFC Bank and Yes Bank, already they have increased their rates, making these deposits more attractive for overseas Indians who are looking at parking their money in India. So that entire move is expected to help bring in fresh foreign currency funds and strengthen banking system liquidity. Let's find out more from my colleague Piyush. He's joining us. So Piyush, as far as RBI support goes, how much is that helping as far as shoring up foreign capital? And that's going to be an important piece to track. But how does it stand right now? What are you hearing?
That is right. Banks have actually started hiking the interest rate on 3 and 5-year tenure FCNRB deposits. We have seen banks such as HDFC Bank, AU Small Finance Bank, Central Bank of India, and Yes Bank and CSB Bank hiking their FCNR deposit rate. These are the first lenders to take the lead in hiking the FCNR deposit rate. Now, depending on each bank, the hike that has been done is around 175 to 325 bips, which is on the higher end of the expectation that economists had. And if we see HDFC Bank and Central Bank have raised their FCNR deposit rate to up to 6%, whereas Yes Bank and AU Small Finance Bank and CSB are offering an interest rate of as high as 7.1% on 3 and 5-year tenor FCNR bonds. Now, why are banks going aggressive? First, lower borrowing cost, as the RBI is managing all the hedging costs for these fresh FCNR deposits. And second, the more deposits the banks get, the more credit they can provide to the financial system. And apart from that, we have seen the RBI has also given some dispensation on these deposits with regard to SLR and CRR. So banks are finding this a very attractive sort of offering for their investors, and are offering rates as high as 6 to 7% on the fresh FCNR deposits.
All right. Thanks very much for putting that in focus, exactly how banks are looking at FCNRB. And at this point in time, we are seeing exactly how those measures are going to boost foreign currency inflow. So these recent measures by the RBI, we are seeing that come through. Punjab National Bank also announcing revised FCNRB deposit rates. This is what we got from the chairman and managing director of the bank, Ashok Chandra.
Today morning only, in fact, you are the first channel where I am going to announce. Today morning we had that ALCO committee meeting, and we have finalized the rate for 3 years, 4 years and 5 years. Up to 1 million FCNR deposit rate will be 6%. 3 to 4 year period will be 6.05, and 4 to 5 years it will be 6.10.
All right. So we got that announcement first on NDTV Profit from Punjab National Bank. Meanwhile, gold financiers, they're facing pressure. They're tracking a sharp fall in gold prices, and also after the news came in, those reports suggesting that the Finance Ministry is seeking information on gold loan lending from the banks. My colleague Shivam is here, and he's going to explain that move to us. Shivam, tell us exactly what the government's purpose is, and these gold financiers, are they really under pressure now?
few of the key reasons that the gold financing stocks are down is the rise in the gold prices in international market, which has further exerted the downward pressure on gold on MCX and gold financing companies. Now, profit booking is also one of the key factors that have added to the decline. Technical indicators also remain weak, and additionally, according to the media sources, the finance ministry is seeking data on gold lending, which has created a caution too. On the macroeconomic indicators side, the ongoing geopolitical tensions like the US-Iran has created the pressure in the price, and the higher crude oil prices are also adding on to the that. Interest rates and bond yields have been remaining higher on the globally, and the strong US dollar is also reducing the appeal of the gold. Now, what will be the impact of the gold loan on the gold loan companies? The falling gold prices will result in the decline in the value of the collateral that the company holds against the lending, and this will also result in the loss given default at a higher rate. Now, looking at the gold price movements in recent times, so the gold has declined around 8% on month till date basis, and nearly it has corrected around 25% from January 2026 highs.
All right, this helps us understand exactly why the government is pushing for this and the resultant impact as well. Thanks very much, Shivam. Now, India's mutual fund industry has seen signs of moderation in the month of May. So according to AMFI data that we are looking at, equity mutual fund inflows have actually slowed sharply. This has happened during the month, and it's fallen nearly 40% month on month and come in around 22,900 crore rupees. That decline coming after a period of strong inflows. It's reflecting a more cautious approach from investors amidst the heightened market volatility that we are seeing. There is a lot of global uncertainty as well. So SIP contributions have also eased marginally, of course, but from the record levels, they have climbed down, although they continue to remain above that 30,000 crore rupee mark. It highlights the resilience of long-term retail participation. But while inflows remain positive, the latest data is suggesting that investors are becoming that much more selective when it comes to the markets. They're grappling with geopolitical risks, they're fluctuating crude oil prices as well that they're grappling with, and the global macro concerns that are coming up. Let's turn to the markets regulator, SEBI now, which has proposed easing of compensation disclosure norms for mutual fund houses. They're shifting from individual salary disclosures to an aggregated format. So under the proposal, the AMCs will need to disclose their total compensation, the total compensation paid to the key executives, to the top employees. And of course, this would happen without naming the individuals. What are these norms exactly? Let me go across to my colleague Nimit. He's got the details. Nimit, how's it looking on this front?
Now, SEBI is proposing that they change the way AMCs report their top management's pay disclosures. Now, earlier what was being done is that the top management, the CEO and the other C-suite executives, along with the top 10 employees of the company, which can include fund managers, who are earning the highest amounts, the top 10 had to be named along with their pay. What the Association of Mutual Funds pointed out to SEBI was that there were concerns over this granular name-wise remuneration disclosure. There were security and data privacy risks, and also that mutual funds are trust structures. Investors are unit holders and not shareholders. So that standard and degree of disclosure may be a little lower. They also said that they face a talent disadvantage versus PMS and alternative investment funds, without which do not have similar norms of disclosure applicable to them. So now SEBI has proposed that you don't need to do these individual disclosures. Instead, you do it consolidated. You tell me these are my top employees, and this is their consolidated pay without revealing anyone's individual pay. This sort of addresses and balances the issue from a transparency perspective, and also addresses the mutual funds' concern about the data of individual employees going public.
All right, Nimit, thanks very much for that. Of course, we'll keep tracking how the mutual fund inflows are actually panning out, but that's something we do on an ongoing basis. Also, what we do on an ongoing basis is monitor the crude oil prices. They are inching higher. Input cost pressures are also beginning to show up on store shelves. So the resultant impact on FMCG companies, raising of prices across categories is one part of it. Some are also cutting pack sizes to protect their margins. My colleague Sesa Sen has been following that trend, and she's joining us with more on it. Sesa, do tell us now about how all of this is impacting FMCG companies, the kind of pressures we are seeing on input costs.
Prices of everyday household products are on the rise once again, with FMCG companies taking price hikes across select categories such as biscuits, soaps, detergents, toothpaste as well as edible oil. Now, as inflation continues to squeeze household budgets, consumers are changing the way they shop. Now, take a look around this grocery store and you will notice shelves, stacked with 5 and 10 rupee packs, as more and more consumers are opting for these low-priced packs instead of the larger family-sized products. Now, industry executives say that demand for these low-priced packs has been growing nearly twice as fast as the larger formats in the recent months. From biscuits, shampoos to edible oil as well as flour, consumers are increasingly choosing smaller quantities and at the same time buying more frequently. The idea here is simple. Instead of spending a larger amount in one go, households are spreading their expenses across the month. Now, this shift is not just being observed in rural India, but also in the urban pockets. Now, in response, companies are increasing their production lines, the availability of small packs, even as many resort to shrinkflation, that is reducing the pack sizes while keeping the prices unchanged at the popular 5 rupees, 10 rupees as well as 20 rupees price points. Now, for now, these affordable packs are helping consumers manage rising costs and at the same time helping companies boost their volume growth. But with companies indicated that the price hikes so far have been very selective, there could be more price hikes on the horizon. The pressure on household budgets may be far from over. This is Sesha Sen for NDTV Profit from New Delhi.
Thanks very much, Sesha. That really puts in focus the kind of margin pressures that these companies are currently facing, and we'll see how they tackle them. Meanwhile, according to the sources we've been speaking to, the Fertilizer Ministry is now seeking this 100% hike in the subsidy budget. They're trying to help offset their rising input costs as well. All of it happening as tensions in West Asia pushes up the prices of key raw materials that are used in fertilizer production. For this, let's go across to my colleague Shrimi. She too is joining us from Delhi. Shrimi, tell us how things stand on this count, because we're seeing cost pressures building in to every sector. And now you tell us about how the Fertilizer Ministry is seeking to tackle it.
Well, India's fertilizer subsidy burden could rise to a record 3.4 lakh crore in the current financial year, nearly double the budgeted allocation of 1.7 lakh crore, as elevated global prices and supply disruption threaten to sharply increase the fertilizer import cost. Now, according to top sources, the Fertilizer Ministry has sought a 100% increase in the subsidy outlay, citing, of course, the sustained rise in the international fertilizer and feedstock prices. Importantly, the demand comes less than 3 months into the current financial year, reflecting a growing concern over the impact of geopolitical tension on the fertilizer import bill. But do remember the fact that India relies heavily on the import for key fertilizers such as urea, DAP and natural gas, etc., used as feedstock for domestic production. Any prolonged disruption, could push, of course, cost even higher. However, sources said that, the government is keen to shield farmers from rising input cost and is unlikely to allow a significant increase in the fertilizer prices during the ongoing sowing season. Now, as a result, a large part of increase is expected in the import cost and may have to be absorbed through the higher subsidy support. But the sharp rise in fertilizer subsidies could also add in fiscal pressure, and that's very important when Centre is targeting a fiscal deficit of 4.3% of GDP in the current financial year. However, officials maintain the stance that budgeted capital expenditure plans will remain intact, will continue despite the potential increase in the subsidy spending.
Thanks for putting that in perspective for us, Shrimi. We'll see exactly how this sector now deals with the kind of input pressures that are building up. Meanwhile, in Delhi, Prime Minister Narendra Modi, becoming India's longest-serving elected Prime Minister in continuous office, he completes 4,399 consecutive days in power, surpassing the records of Jawaharlal Nehru and Indira Gandhi. So that achievement comes even as Prime Minister Modi completes 12 years in office, continuing his third consecutive term. So the Union Cabinet has passed a resolution congratulating the Prime Minister on the milestone, members applauding his leadership and giving him a standing ovation today. So a big achievement for the Prime Minister. And that's about all we could pack into this edition of The Bottom Line. Indeed, we hope to see you same time tomorrow. But until then, from me, Vikram and the entire team, good evening.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets neutral.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300 300.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where I get you interesting mid caps and small caps, and at times even large caps also, and try to give you the story behind the sector and the company as well. But before that, try to guess the company which we are getting today in KYC. First one hint is it's a dairy company founded in the year 1992. Second hint, it's backed by ace investor Sunil Singhania's Abacus fund. Pretty interesting, right? Let's talk about the third hint. The stock is up just 48% in the last 5 years. So definitely they have, tested the investor patience. The company plans to grow their ice cream segment revenue by 5 times by 2030. Pretty interesting to understand this company. And the company in focus, I'm sure you know there are 3 to 4 listed dairy companies, but the company in focus is going to be Heritage Foods. Yes, this is the company which we are going to talk about in KYC. But why are we getting this company? Earnings season is over. What's so special about this company that has taken my interest? The first is the company's strategy ahead, especially with the focus on the ice cream segment. That is where everybody's talking about it. Recently, a lot of companies are moving from oil to milk, so it'll be pretty much interesting how premiumization plays out in the ice cream segment. The margins, will there be under pressure in what was seen in FY26, or will there be any change in FY27? How the milk procurement prices and volumes looking like, and most importantly, any impact of El Nino in the milk industry. Also, I'll be asking the company about the share of the value-added products versus the milk segment, and I'll give you the breakup also of these revenues, the growth expansion strategies ahead for the next 2 to 3 years for Heritage Foods, and of course another important question to be asked will be the reception of the newly launched product, especially in the paneer and the organic milk segment, how things have panned out, and any other further ancillary acquisitions which the company is planning, maybe a D2C acquisition or not. To understand the entire process, we'll have Shrideep Kesavan, the CEO at Heritage Foods, where Shrideep will answer most of our queries. But let's try to understand and get in more about this dairy company. It's of course located in the south region, but let's get into the details about it, the history about the company. So it's a dairy company. It was co-founded in the year 1992. It's backed by Sunil Singhania promoted Abacus. That's around 1.4% stake is being held by them right now. Operations, they span of course 16 states of serving millions of customers. And also, what are the products? Dairy, value-added dairy products, which we talk about it, be it curd, be it your shakes, everything is covered in that. This is the overall capacity, the processing capacity as well as the chilling capacity. While on the other hand, there are totally 18 plants and closer to 7,500 distributors and 225,000 retail outlets as well. But how does the revenue show up? What's the revenue breakup like? Milk is still higher, 56%, and every dairy company has a story that they are moving towards higher contribution from VAP. VAP is your value-added products, which is high margin. Demand is also pretty much decent, especially in both rural and urban areas, and that is why the street might start giving value to the stock or the sector if this contribution goes up. So this is the revenue breakup for Heritage Foods. Also, let's talk about the industry growth potential. Interesting data. Ice cream has an organized market share of 40%. Compare that with paneer is just 4%. But let's look at the CAGR growth for the next 7 years. 18 to 20% is for ice cream. For dahi curd, it's 21 to 23%. Look at paneer, 23 to 25%. And if you decode the ghee segment, it's on the lower side, roughly 9 to 12%. But remember, there is a good potential and India is a consumption story play. What are the key numbers for the Q4? Of course, the numbers were quite, you could say, mixed. Procurement prices, that increased by 8% on a year-on-year basis. And if you look at the average selling price, there was a slight increase from 55.6 last year to 57.8 per litre. Apart from this, the value-added product, look at that. That is where the growth is coming in. That is up almost 18% on a YOY basis. And there are some consumption packs also, if you talk about it. Ghee, butter and VAP, which is the value-added products, that's also seeing a revenue uptick of almost 22.5% on a year-on-year basis. But what may work for the company? That's the question you'll ask me. Of course, the valuations are attractive. There was once a euphoria 2 years ago. 4 out of 5 analysts have a buy rating. So coverage is less, but nevertheless, it's quite bullish. The milk output is likely to remain strong in the year FY27. And this is despite the El Nino impact. Ice cream business, they are quite bullish on. From the current revenue, they're expecting it to go up to 5x, almost 500 crores by FY30. And this is where we are focusing. But what may not work for the company? Let me get you that reason. FY26 has been impacted by severe milk shortages. The pressure was coming on the margins, procurement inflation, and a weak flush season. So, of course, the FY27, will it improve or not? That's a big question. Sector is out of Street's favor. Though it's not in that flavor also anymore. The working capital numbers may get stretched. That is where a little bit of concern comes for me, which I was just checking the numbers. So definitely concern is there in the sector as well as the industry. But another important place for concern is our KYC ratings. And KYC ratings, we try to understand with these 8 parameters on how we get our final rating on the company. Of course, this includes income statement, balance sheet, cash flow. This is of course there, but we also get in the ROC numbers to see, is there a pressure coming in the company? Apart from this, we also have the street cred, which is nothing but how much the money has actually been made by the stock for a long-term investor, short-term investor, and also we get in shareholding, valuations, we compare that with the other dairy players, and of course the outlook, both company specific and the industry. We get you all of these details compressed in the 8 ratings. So let's start with the first rating, and that is the income statement. An income statement, largely the 3-year CAGR numbers. Top line is not that impressive, it's just 12%. But if you look at how the EBITDA is panning out, or even how the PAT is panning out, that's where we see almost 20% plus CAGR gains coming in. But my concern is in the 4th quarter numbers and also the FY26 numbers. There was an impact, and that is where we are seeing it, and it's an aberration. So both EBITDA and PAT, that is where the hit has come in on a year-on-year basis. And largely we see the margins have been in between that 4 to 8% range, but there is a correction from 8% coming down to 6% odd. So there is compression of margins. The management also stated, I gave you the reasons for it also. So it is giving a very mixed signals right now. So I'm going to give this a neutral rating. Let's talk about balance sheet. Balance sheet is largely for a company's this size. They have maintained it decently. But the borrowing, of course, this of ex-lease liabilities, the number comes in at 324 crore rupees. When it comes to the bank numbers also, it's kind of decent. But yes, in case there are some payment issues, then receivables might be in question. But it's nothing there right now on the balance sheet as of now. It's quite decent. A little bit of increase is there in the debt equity ratio. It's almost 0.3 times, but no major concern. So it's a neutral rating as well when it comes to the balance sheet. So we spoke about income statement, balance sheet. Largely neutral ratings I have given. Let's see what's happening in cash flow. And of course, look at the cash flow numbers. They were pretty strong in FY24, but that cash flow from operations seems to have come off in FY25 and 26. Largely the conversion has been pretty strong, and the net cash flows also, a little bit of adjustments are definitely there. But net, nothing much major to learn from this cash flow, to be honest. So I'm going to give this a neutral rating as well. Now a little bit of concern comes in for the return ratios. Largely it has been very volatile. You saw in FY22 the company enjoyed almost a 20% ROC numbers, and after that it has been kind of downhill, and it's tried to come up and it's back at that 24 in FY25. But then again, the margin pressures which came in the business, that also impacted the ROC numbers, and it's at 14% right now. So a very volatile kind of a setup for a dairy company when it comes to the ROC. And remember, expansion is at play. आइसक्रीम का बिजनेस भी धंधा बढ़ा रहे हैं और 2-3 नए लॉन्चेस भी कर रहे हैं कंपनी. So it's a neutral rating right now when it comes to the ROCE. Let's talk about shareholding. What has happened, what hasn't. Promoter stake hasn't been touched over the last 2 years. But look at the variations for FIs. March 24 it was 2%, it went up to 6%. Again it's back to 2%. So FIs haven't moved out, but a lot of volatility has come in. DI is also a little bit of concern is there. It was as high as 11% in March 24, but after that it fell to 4%, and now a little bit of DI buying is happening. Can you call it smart money entering again to the stock? We need to see and wait it out. So net, it's giving us mixed signals for the shareholding pattern. So I'm going to give this a neutral rating. Let's also talk about street cred, what has happened, and I think that's where the concern lies. I had given you the hint. The company has just made 48% in the last 5 years, and that is not good. If you're a long-term investor, the stock has tested your patience, and from 2025 highs, the stock is down 40%, and if you look at the last 1 year, stock is down 32%. A minor increase coming in from March lows this year, but a lot of stocks went up. So net, yes, the stock hasn't made money for much of the investors, and I'm going to give this a thumbs down as well in my analysis. But the question is, if there is so much stock fall, does this make the valuations quite attractive? Well, the entire sector has seen a churn, and that is why most of the stocks which were trading at 40-50 times almost 2 years ago all have corrected, and they are stabilizing right now. Does it mean it's quite cheap? Well, it's evenly priced, I would say. I wouldn't make it very cheap also, because the sector has seen a derating, and remember, there is a cyclicality.